That's not what happens. If somebody sneezes on you, that's a different story, but it's primarily from people touching, desks, chairs, doors, etc.
No touching. Michael,
so keep your hands up all the time.
Good.
And no touching your face.
And you don't, yes, you can touch this, but then don't touch your face. Yes.
We're learning that quickly. Yeah. Thank you, Mike.
I want to thank you very much, guys. Thank you.
All right, meantime, the White House is considering financial relief for workers and businesses that are impacted by the coronavirus. Eamon Javers.
To do with liquidity. This is not a financial crisis in any way, shape, or form. This is a expectation changing that the real economy is going to slow meaningfully because of this exogenous shock that the coronavirus represents. And the president wants someone else to blame, but in reality, there really is no one to blame for this. And I think that has to be the takeaway that most investors need to remember.
So, Ira, we now have the 30-year Treasury up above 1% at 1.1% right now, but yesterday we had the entire U.S. yield curve below 1%. You've been doing this a long time. What did that tell you?
Well, just what I noted, that the market is certainly expecting there to be extremely low growth, extremely low inflation for a very extended period of time, and that's certainly what the 30-year bond yields are talking about. So when we talk about the regular bond yield, that's made up of two basic components, and that's the expectation for inflation, which right now for 30-year over the next 30 years, the market's expecting CPI. This is headline CPI, so with gas and with food and everything else, to be about 1.25% on average for the next 30 years. So, hopefully I'll live a little bit longer than that, but most of the rest of my lifetime, the market's not expecting very much inflation. And the other component of that is what's called real yield. So this is the amount of risk premia that investors are demanding above inflation, and that's negative. So that's telling you that they don't expect there to be a significant amount of growth, a significant amount of volatility and growth, again, over the next several decades. And I think that is the market right is a question we have to be asking ourselves. So, what happens if the coronavirus isn't quite as bad as the worst case, which I think is what the market was certainly pricing yesterday? If it's not that bad, should real yields in particular be significantly higher? And I think the answer to that's probably yes. But the problem is that none of us know what the end game for the coronavirus is and what the long-term economic impact of it is going to be.
Right now I'm looking at the expectations by Fed Funds traders, Fed Fund futures traders, and they are expecting the Federal Reserve to cut rates by an additional at least 50 basis points at their March 18th meeting. The idea that we're pricing in basically going to zero within the next few meetings, and we're still pricing in such a low longer-term inflation rate. What is the implication to the Federal Reserve? Do you think that the implication, or let me reframe that, the implication is it's not going to work. So what does that say to the Federal Reserve in terms of what they should do in their next steps?
Well, this is the problem, and I think if Jay Powell really wanted to have a Twitter war, he would have a very justified to have a Twitter war with the president right now and say, look, monetary policy can't and won't work. Cutting to negative 100 basis points won't work and might actually cause more problems to the U.S. financial system than it would help. People aren't actually going to be able to borrow at negative. People aren't going to actually, take all of their money out of the bank because they're getting negative interest rates at the bank. There has to be a fiscal response. And I think one of the reasons, and clearly the reason why you're seeing equities up today and why you're seeing bond yields higher today is because of the expectation that there'll be some form of fiscal response that will, mute the worst case scenario for the economy, and maybe, getting people who might be most affected in, say, the hospitality industries, the workers that would have been laid off, maybe getting them some relief and knowing that, they're going to be able to put food on their table and pay their rent during the the worst of this crisis, is a positive. You need a fiscal response to these types of shocks. It's going back to 1999, for example, you needed fiscal stimulus during that crisis, during that recession. It wasn't something that low interest rates were going to help. I mean, at the time, we cut interest rates 500 basis points from 6% all the way down to 1%, and yet it took 2 years in order to get a fiscal response that was kind of enough to be able to stimulate the economy. This is not very dissimilar to that. This is not like 2008. This is not something the Fed can help. This is something that has to have a different kind of response.
Ira, thank you so much, as always, for your perspective on the interest rate market. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, joining us on the phone from Princeton. Looking at the market right here, kind of holding on to our gains here, Lisa. The S&P up 87 points. That's a little over 3%. Again, the Dow up right at 3%, 708 points, 24,561 on the Dow. A little bit better in the NASDAQ. NASDAQ's up 269 points. It's about that's about 3.4%. This is Bloomberg.
This is a Bloomberg Money Minute. A rally for stocks after the worst day on Wall Street since the financial crisis. President Trump is promising to unveil what he calls very dramatic action to support the economy today. The proposal will likely include a payroll tax cut and relief for industries hit by the coronavirus. The Dow jumping more than 750 points. Oil rebounding from its worst loss since 1991. Crude right now up 8% at $33 a barrel. The markets mostly ignoring the escalating clash between Saudi Arabia and Russia, which announced substantial production increases. And the prospect of an extended confinement at home due to the coronavirus has sent people scrambling for some unusual purchases. Oat milk has become a hot commodity due to its longer shelf life than dairy-based products. Survivalist gear popularized on the National Geographic show Doomsday Preppers is in demand, and Hostess reports sales of their famously indestructible snack, the Twinkie, are soaring. Courtney Donahoe, Bloomberg Radio.
Listen, as a hiring manager, I've got to tell you, the best job candidate isn't always the typical candidate. Sometimes they're a grad of life.
Meet the grads of life. Young adults of unique determination and experience. An ideal fit for your company in an entry-level position, internship, or mentorship. They might not have every qualification you typically look for, but they're exactly who your company needs.
Sometimes the best candidates aren't the ones you're used to.
Go to gradsoflife.org to learn how to find, cultivate, and train this great pool of untapped talent. Brought to you by the Ad Council and gradsoflife.org.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers. In-depth analysis.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge with a roaring first race special every day of the festival. Sky Bet, that's betting better. Applies to first bet on the first race at Cheltenham on the main race market only. Place terms apply. Eligibility restrictions. Offers vary each day. Check site for details. T's and C's apply. 18+. BeGambleAware.org.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, and try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
Petrol or electric? Why choose petrol and electric? Discover the BMW plug-in hybrid and electric range. Visit your BMW retailer. Sometimes electric, always BMW.
The moment you realise you've drilled through an electric cable. The moment you realise that doesn't just mean no telly on the wall, but no telly full stop. The moment you realise you've got British Gas Home Care. And not just your electrics, but your plumbing, heating and drains are all covered. So the moment you've got a problem, make it our problem. British Gas, here to solve. Search British Gas Home Care.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we'll take a look at the spreading coronavirus, its effect on Italy, its effect on markets. Right now, let's get the effect on markets from Greg Jarrett, who has the numbers for us. Greg.
Yes, this Bloomberg Business Flash is sponsored by Commonwealth Financial Networks. For the 6th straight time, J.D. Power ranks Commonwealth number 1 in independent advisor satisfaction among financial investment firms. Visit Commonwealth.com to learn more. Off highs, but still up. The S&P 500 is currently up 2.6%, up 70. The Dow is up 2.3%, up 558. And the NASDAQ is up 2.9%, up 230. The 10-year is currently down just about 0.8%, with a yield of 0.6334. West Texas Intermediate crude oil is up 2.5% at $33.63 a barrel. COMEX gold is down 1.25% at $16.5480 an ounce. The dollar yen 104.27. The euro $1.1364, and the British pound $1.3010. That's a Bloomberg Business Flash. I'm Greg Jarrett.
Hey, Greg, while we have you, we know you're based in San Francisco. Love to get your thoughts on kind of how the coronavirus is impacting daily life for you folks.
It's hitting pretty hard. You probably heard the new restrictions in Santa Clara County, which encompasses Silicon Valley, Stanford, the San Jose Sharks, the earthquakes, so on and so forth. They've banned all gatherings of more than 1,000 people. That's 3 Sharks games left for this month and 1 earthquakes game. And I just checked the convention schedule for Santa Clara County. It shows no events. And I know just a couple of days ago, there were all kinds of meetings that were planned.
Interesting. We'll keep, obviously, an eye on that as the virus continues to go. Greg Jarrett, thanks so much for your report from Bloomberg News in San Francisco. Right now, let's get a sense of what's going on in Italy. More news coming out there as they expand the travel ban or lockdown, if you will, to the entire country. Ferdinando Giuliano is an editor for Bloomberg Opinion based in Milan. Ferdinando, thanks so much for joining us. It just seems to be no end in sight in Italy. Can you give us the latest on what's going on in Italy?
Well, the latest is that the Prime Minister decided to extend this lockdown, which we've had in the region of Lombardy around Milan and in a number of other northern provinces, to the whole of the country. Now, that doesn't mean that people can't leave their home. This is not like Wuhan in China. You're allowed to leave your house, but only for work-related, health-related reasons, or if you need to go and do some food shopping. On top of that, there are a number of big restrictions on, for example, things like gyms, swimming pools, ski slopes are all closed. Football matches have been cancelled together with any sporting activities. And you've had the schools are closed until the start of April. And the government doesn't want people to do even small gatherings outside in parks. They're really trying very hard to enforce, this social distance, as they call it, because they think this is the only way to stop this outbreak.
Ferdinando, there is the immediate concern just stopping the spread of the coronavirus. Italy seeing the cases explode, and they're trying to prevent that. They're also getting some other countries in Europe closing their borders to Italy, trying to stave off the spread into their nations. There's also a larger question, if you take a step back, not to take away from the humanitarian issue of people getting very ill and dying, but taking a step back, is democracy equipped to handle this as well as, say, an authoritarian regime like what we've saw in China, where they just basically shut down entire cities and had the authority to throw people in jail if they didn't comply?
Well, that's the question which I tried to, pose in a column recently. Clearly it's harder. I mean, here the government really has to convince people to stick by the rules. Yes, there are policemen going around, and you need to prove to the policeman that you're going to work. There are fines and even small jail terms for people who break the rules. But it's incredibly hard to enforce this. It's all down to really persuasion and conviction. Now, the good news I find is that South Korea seems to be at last, containing the virus quite effectively. South Korea is a democracy. Of course, it's an Asian democracy. They have different tradition, different culture, and they had the experience of SARS, which really taught them an important lesson. But I think, I still think Western democracies can do it. I just think they need to take measures, and I don't see other countries across Europe or even the United States doing the same, unfortunately.
So, Ferdinando, we know there's been cases have been generally limited to the north of Italy. How has it progressed in the southern part of the country? If so, to what degree? And do you expect the folks in the south to follow this as well?
More slowly. I mean, the big outbreak was here in southern Lombardy, and this is a big concern for the government. I mean, what's outstanding, I'm not sure people have quite grasped this, is that the healthcare system in Lombardy, the region around Milan, is one of the best in Europe. Access is very easy and free, and the healthcare system is very efficient. And yet, they are overwhelmed with the number of patients, particularly people who need intensive care. There's just not enough bed or around to help the increasing quantity of people. Now, southern Italy is poorer, and the healthcare system is less effective there. So the government is trying really hard to contain the outbreak now, because the fear is if it moves south, you're not going to be able to have the kind of response which you're seeing from doctors and nurses here in regions like Lombardy, which has been just outstanding.
Ferdinando, there's this perception out there, and it's been edified by a number of stories, that people in Italy are basically not dismissive, but they're going out and they're saying, basically, I'll drink some wine and it'll be fine. Is that the mood when you go out and when you're on the street, or are people taking some of the curbs seriously?
Look, I mean, I think last weekend there was an issue with, some people. You saw photos of crowds which were gathering outside. It was a sunny day, and people were making the most of it. Part of it is natural. You don't think this is going to happen to you, but there is also, if you want, a generational problem. Young people feel they are kind of immune from this virus, because if you look at the lethality of the virus, it's mainly for older people, and so they go around as they think they have very little to fear. Now, that's not completely true, because you do see people maybe in their 20s and 30s who can have serious consequences of the virus. But it creates a problem. Now, the government is trying very hard on clamping down on this. For example, they shut down the ski slopes, which was one of the images last week, which caused some problem. Let's see whether it works.
Ferdinando, thank you so much for being with us. Stay safe, stay healthy, and we appreciate all your reporting and insights. Ferdinando Giuliano, a Bloomberg Opinion editor, joining us from Italy, where the nation is shut down currently, and they are not able to leave. And now we have some guidance that it could be for at least another almost month as schools shutter and people try to prevent the spread of the virus. Right now, let's head toward 99.1 Studios in Washington, D.C. Nathan Hager. Nathan.
Lisa, in a sign of confidence that the worst may be over in the city where the novel coronavirus first emerged nearly 3 months ago, Chinese President Xi Jinping visited the city of Wuhan today. China reported just 19 new cases today, but as you mentioned, Italy, with more than 9,000 infections, is the first country to attempt a nationwide lockdown. Health Secretary Alex Azar says something like that probably wouldn't fly here.
The United States is the center of a global economy with travel all around the world. There is no way you can hermetically seal the U.S. off from this.
The White House is putting together an economic response to the outbreak. Senate Majority Leader Mitch McConnell says he'll talk about it with Treasury Secretary Steven Mnuchin today. President Trump suggested last night the proposal could include a payroll tax cut and an extension of paid sick leave for quarantined workers. Bernie Sanders is hitting at President Trump's response to the outbreak so far.
Suggest to people that when you are sick, you go to work might be the stupidest advice ever made by a president of the United States.
Sanders spoke at a public health roundtable in Detroit yesterday. Michigan is a focus for the Democratic presidential candidates. 6 states hold primaries today. Michigan has the most delegates to give. Florida says it has traced 3 coronavirus cases to a cruise service company based out of Fort Lauderdale's heavily trafficked seaport. The Florida Department of Health says all 3 are linked to Metro Cruise Services operations at Port Everglades. The agency says anyone who has been to that port recently and is showing symptoms should call a doctor and self-isolate. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Why is delivering the best client experience a top priority at BNY Mellon's Pershing? Michelle Feinstein, Director of Client Engagement, explains.
Today's investors want a financial relationship that's on demand, customized, and leverages the latest digital technology. At BNY Mellon's Pershing, helping advisory firms and broker-dealers create great experiences for their clients is our priority. Through our integrated wealth experience, we give you a high-touch service, flexible technology choices, and expert insights, so you can deliver a highly personalized experience to your clients at every step, from onboarding to wealth planning, to performance analysis and more. And because we're part of BNY Mellon, you'll benefit from more than 230 years of strength and stability. At Pershing, we're personally invested in your success.
Visit Pershing.com to learn more about Pershing's integrated wealth experience. Pershing LLC and Pershing Advisor Solutions LLC are both members of FINRA and SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What's up?
Move over, football. Cheltenham coming through. And Sky Bet are on the charge with a roaring first race special every day of the festival. Sky Bet. That's betting better. Applies to first bet on the first race at Cheltenham on the main race market only. Place terms apply. Eligibility restrictions. Offers vary each day. Check site for details. T's and C's apply. 18 plus. BeGambleAware.org.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
Nick Sweeney co-founded Keurig Green Mountain, a company whose incredible innovations changed the way the world brews a cup of coffee. Today, he lectures widely on business leadership and is a strong advocate for NJIT's work to combine business education with the power of STEM.
NJIT is definitely fostering the innovative thinking for budding entrepreneurs simply because that's the world we live in. NJIT is producing students that have been trained, educated, and given the business acumen to be a contributor to a company. The distinct mission is to develop great STEM scholars. The attributes I've always looked for in team members are heart, smarts, guts, and luck. So we want people with passion, intelligence, courage, and never discount luck. The student coming out of NJIT has experienced all of that.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SCI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SCI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SCI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SCI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at seic.com/seize change.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks are dipping a bit after a surge at the open that took back 50% of yesterday's massive drop. The early optimism was on the tail of President Donald Trump saying he would announce substantial economic measures today to fight the fallout from the coronavirus. We look at the numbers every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is now up 1.9%, up 53. The Dow is up 1.6%, up 400. The NASDAQ is up 2.3%, up 179. The 10-year is currently down 21/32 with a yield of 0.60%. West Texas Intermediate crude is up 2.2% at $33.30 a barrel. COMEX gold is down over 1% at $16.5820 an ounce. The dollar yen is at 104.14. The euro $1.1365. The British pound $1.2996. Royal Caribbean cruises may be cut to junk by S&P Global Ratings as fears intensify. The coronavirus will continue to dramatically reduce travel. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Well, as Greg Jarrett was just talking about, we are seeing the sell-off wane a bit. We had seen gains up over 3%. Now the NASDAQ up 2.2%. We are, though, getting a sense of just the incredible volatility, this wish to buy the dip that we saw yesterday. That was the worst one-day sell-off since the financial crisis in the United States and, frankly, the world, which raises a question. Are we fundamentally in the same place that we were 3 weeks ago, just with a virus that needs to be dealt with, gotten rid of, and then we can resume the rally and the buy everything, and then there is no alternative trade? Or are we in a fundamentally new situation that is much more likely poised for a recession? Joining us now, David Katz, Chief Investment Officer at Matrix Asset Advisors, based in New York, joining us by phone so we don't give each other coronavirus. David, I'd love to get your sense here. I mean, on a day like yesterday with such violent moves, not only in stocks, but very much in bonds, government bonds, absolutely surging, yields ripping to new lows, credit selling off with the high yield energy sector seeing its biggest one-day move in spreads since ever, actually. Were you buying? Were you standing back? What was the mood?
So the mood is clearly very worrisome. However, if you have been through these before, and unfortunately or fortunately we've been through them for quite a long time. We've been doing this for about 35 years. We think we're in a tail end of a panic, significant bear market sell-off. And the key to being successful as an investor is not to get caught up in the mania of the moment. So not to lock into 30-year bonds that are paying 1% for 30 years, which is absurd, and not to get scared out of stocks. We think that the coronavirus ultimately will be able to be handled. Hopefully there will be some sort of a treatment. Hopefully the governments will start to do better in terms of containing it. And we think that the economic slowdown that you're going to see in the first and second quarters as a result of this are going to be reversed at least by half in the third and fourth quarters. And if you look at crises historically, the market's going to discount the negatives and start to look for the recovery. So the moral of that is take a longer-term view, 9 to 12 months. You're able to buy some great businesses at great prices. You're going to feel stupid a day later, a week later, a month later, but there's an enormous likelihood stocks are going to be a lot higher 12 months out.
So, David, if I do have the courage to look through to the other side, what are some names I should be thinking about here? What are some kind of strategies I should be thinking about?
So we're going to give you a list of names that are sort of low risk. They're paying about a 4.5% income stream, so you're getting paid while you wait. Compare that to getting 0.6 in a 10-year bond. So names like AT&T, AbbVie, CVS, Cisco, Home Depot, JP Morgan, Merck, PNC, Verizon, Viacom, and Wells Fargo. 10 great businesses selling at 10 times earnings, 4.5% yield. And interestingly, they're really not going to be negatively impacted by the coronavirus. Their business might be down a little bit, but it definitely is not going to be severely impacted. And these businesses are worth as much today as they were 3 months ago, and you're getting them at a great price.
What's your time horizon?
we're looking at 9 to 12 months. We think things will be a lot higher. I mean, quite possibly if there's any sort of relief in terms of the coronavirus, it could happen quicker. But as an investor, be prepared for stocks to go lower first. When you have a big problem like the coronavirus or the oil price war that took hold yesterday, you get very big solutions. So you're starting to hear both the U.S. government and the global governments talking about relief, whether it's on a monetary or fiscal policy. Science is going to kick in a huge way. There are enormous incentives for companies to find treatment for this. Hospitals are going to start to do better. So what generally happens is when you have a crisis, people straight line the crisis, assume it lasts forever. And usually there are solutions along the way. Now, having said that, I'm sorry.
But arguably that's exactly what was being priced into the market this morning before it opened with the rally that we saw. And it's being stifled a bit by news out of CNBC in particular, where they're reporting that the White House may not release any details on any kind of fiscal stimulus today, as they had said that they would yesterday. I'm just wondering, let's say we don't get a response on the fiscal side. What then?
Well, you know, everybody is immediate gratification oriented. The reality is whether the government comes out with a response today or they come out with a response next week, there will be a response. You know, this is a crisis. The economy is slowing substantially. The government needs to react. They need to take actions that will protect workers so that if you're sick, you can stay at home and self-quarantine yourself and still get paid. Big problems will result in big solutions. So whether it's today or it's in a few days, it's going to happen. And as I said earlier, the key is not to get caught up in the day-to-day movements of the market, because you're not going to get that relief. You're not going to have a bell ring that says, okay, it's all clear to buy. You're going to buy, things will go lower. But there's a great likelihood if you were to buy some of the names on the list that we gave you, that by year end they could be 20 to 40% higher, and you're getting that dividend along the way. You know, contrast that to locking in 0.6 for the next 10 years, which is just patently absurd.
So, David, again, do I think about taking on even maybe a little bit more risk here? I look at maybe the cruise lines or the travel companies that have been hit the hardest here, down dramatically. Is it time to kind of say, hey, before the coronavirus, these were good businesses and they're likely to return to being good businesses?
So we would not be that bold. You know, so in terms of the cruise lines, they have huge capital expenses, and if the ship goes out or they have to cancel cruises, they really do lose money and they can have a cash crunch. So we would avoid things like that. We do think if you have a 24-month time horizon, they probably will be higher. They could go down first. The flip to that is a company like BookingsHoldings.com. They book travel, and what they have shown historically is you have a significant downturn in bookings during a crisis, but as soon as the health issues are off the front page, people do book in terms of hotels and airlines. They are still making money during this downturn. They're buying a lot of stock back. So we've looked at it. We're not ready to act on it. If you really wanted to swing for the fences, we think this is probably one of the more reasonable ways to play it. But what's happened also is the financials are getting marked down as if we're in a financial crisis. And as a result, you're able to buy businesses that are really not going to be that adversely impacted and are still going to come back really good. So, you know, you don't have to play the travel stocks well. We think there's so many stocks out there and a lot of them less exposed. I had mentioned Viacom, the stock's at 19.5. We think that company could easily be at 40 or 60 in the next few years. So we'd rather speculate on something like that than, you know, go into things that are really being hurt.
Hey, David, thanks so much for your thoughts, and we appreciate you giving us some of those names to maybe take a look at here for those, again, willing to look through to the other side of this crisis here. David Katz, Chief Investment Officer for Matrix Asset Managers, based in New York, and calling us on the phone. We appreciate that. Looking at the markets here, kind of giving up, still positive, still green, but giving up those gains. We have the Dow up 337 points. It had been up close to 1,000 points earlier, so giving back some of those gains, but still a little bit of green. Trying to stabilize, I guess, is a way to phrase it after the carnage that financial markets dealt with yesterday. We'll keep on top of it. This is Bloomberg.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
Delayed at the dentist and now you're late for school pickup. You need a free now. Need to take the dog to the vet before lunch. Should have gotten a free now. Trying to get 4 kids and their baggage to the airport. Free now. Sometimes you can't get from A to B fast enough. Download the Free Now app today for quick pickups and reliable drivers, no matter the situation. Less hassle, more hustle with Free Now.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, I'll try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
The financial capital of the world. 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Are we on the brink of a more serious downturn?
I've always thought of the municipal bond market as a little bit of a safe haven.
Banks are going to have to start paying their depositors more.
Are we still in that mode where we're buying the dips?
Breaking market news and insight from Bloomberg experts.
Cash, if you're looking at treasury bills, provides a higher return than stocks and bonds here in the U.S.
If your consumer is a woman, you're more likely to be a growth company.
Longer-term interest rates can go down, even with short-term interest rates still going up a little bit.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up in the next hour, we'll dig into what the healthcare system needs in the United States in order to be prepared for some sort of pandemic. Plus, we hear from former Treasury Secretary Lawrence Summers speaking with Bloomberg's David Weston. Right now, let's get the market action. Greg Jarrett has that. Greg.
A lot of nervous sideways glances at the data screen. Lee says stocks come well off the earlier gain. In fact, the S&P has cut its advance to well less than 2%. Earlier euphoria over pending stimulus appears to be abating. Philip Hildebrand, BlackRock vice chairman, tells Bloomberg that even if oil and virus problems go away right now, there are going to be some continuing headwinds.
Longer term, we're going to see real questioning around global supply chains. One of the things I observe when we talk to CEOs all over the world and the companies that we're invested in, every single audit committee, every single risk committee of every major company is basically taking, asking hard questions to senior management. How are you dealing with the exposure to China, the exposure to global problems?
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is up 1.3%, up 36. The Dow is now up less than 1%, up 229. The NASDAQ is up 1.6%, up 128. The 10-year is down 13 seconds. The yield is 0.5791%. West Texas Intermediate crude's up just about 2% at 33.09 a barrel, with COMEX gold down 1.1% at 16.57 even per ounce. The dollar yen 103.83, the euro $1.1372, and the British pound $1.30. That is a Bloomberg Business Flash. Bloomberg Markets continues now with Paul and Lisa.
Greg Jarrett, thank you so much. We appreciate that. The rally this morning losing some steam here. Let's see where the action is with the small and mid-cap stocks. We welcome Bloomberg Stocks editor Dave Wilson. Dave, what are you looking at this morning?
Well, you look at the smaller companies, and they're definitely losing steam as well. The Russell 2000 at one point was up 2.9% today. Now it's only higher by 0.5%. So it's trailing the S&P 500, which is up by 1.3%. Smaller companies, smaller gains. That's what we're looking at here. That said, the biggest advances in the Russell, a lot of them belong to energy stocks. The largest one is the oil services company KLX Energy Services, ticker is KLXE. It's up 27.5%. And Callum Petroleum, ticker CPE, has risen 20.5%. Oil tanker owners are higher on the prospect that lower crude prices will spur demand for offshore storage. TK, that's TEEKAY, and the ticker is the letters T and K. It's up 23.5%. Nordic American Tankers, ticker NAT, is up more than 19%. Coal producer Hallador Energy, ticker HNRG, has climbed about 26%. The company had an unexpected fourth quarter profit as revenue beat analyst average estimate in the Bloomberg survey. Now, one of the Russell's steepest drops belongs to Frontier Communications, ticker FTR. It's down more than 31%, trading at just 29 cents a share. People with knowledge of the phone company's plans said Frontier will skip interest payments due Sunday as it prepares to file for bankruptcy. Now, Frontier declined to comment.
Dave Olson, Bloomberg Stocks Editor, thank you so much for being with us. We've been talking a lot about the coronavirus, the effect on markets, the effect on businesses. What about the effect on the healthcare system? And this is an important topic, and we're lucky to have Susan DeVore, Chief Executive Officer of Premier Incorporated, joining us on the phone. Susan, you are in a premier place to actually see the issues here. You're discussing with the government the potential vulnerabilities in the healthcare system. What are you finding?
Yeah, we just briefed an administrative task force, and Premier, we're working 24/7. We've got 4,000 hospitals and 175,000 non-acute care providers, and what we're seeing is everybody is worrying about the current supply. The demand is 3 or 4 times what normal demand would be. And because we have a fragmented system, what we're hearing is federal, state governments, and private healthcare systems really trying to figure out how to work together so as not to hoard supplies and to be able to get the supplies where they're needed.
So, Susan, at this early stage here in the U.S., where are the bottlenecks? Where are the problems? Where are the areas that you're focusing on and the other folks in the industry are focusing on?
Yeah, so Premier did a survey of all of our healthcare systems to ask that very question. And what we're hearing and seeing in the data and in the responses is that people are most worried about the protective attire, the masks, the gowns. There is essentially a 2-week supply of that. There are longer term supplies of some of the other stuff, but protective attire that really protects the healthcare workers, protects the people who don't have the coronavirus. That is where very significant short-term challenges exist. I think longer term, there are real challenges for nursing homes and non-acute care providers, and there are real challenges in the pharmacy supply chain. But in the short term, it's centered around right now a lot of the protective equipment and attire.
Susan, what's the historical precedent for this period for the healthcare system and the potential stress we may see there?
We have seen as a healthcare system a variety of, H1N1 viruses and other kinds of challenges. The spread of this one is creating what many people think will be a significant demand. And when you couple that with our dependence on China and Southeast Asia for a lot of these products, we have sort of the perfect storm. We'll have very increased demand for these products, and we'll have limited supply of the products because they're coming from places that, have shut down that exportation. So we as a U.S. healthcare industry have to figure out how to optimize the use of the supplies we have. We've got to follow the CDC guidelines to conserve it, and we've got to figure out how we're going to get from what is a normal 25 million masks used a year to a supply of 500 million. So that is the magnitude of the challenge that we have.
Susan, one of the problems for investors, certainly, but probably consumers in general, is they're getting kind of a mixed message out of Washington, out of the administration and other entities about kind of the extent of this, the severity of this, how we should prepare within the medical community. And again, you mentioned you've been on some conference calls with interested parties. What's kind of the scenario analysis?
The scenario analysis for premier healthcare systems and providers is that 90+% of them are worrying about the supply and demand. And with the ability for this virus to spread, are they going to be able to protect their healthcare workers, and are we going to have enough supply for everybody that needs this protective attire? So I would say that healthcare systems are initiating policies to protect their employees. Many companies, healthcare and otherwise, are canceling travel and limiting large group meetings and those kinds of things. So we're trying to slow or suppress the spread of this, and at the same time, Premier is trying to unite all of these healthcare providers and work with the federal and state governments to really try to ensure we have adequate supply of the products that are needed.
Susan, thanks so much for joining us. We know you're incredibly busy in your team at Premier, kind of working through this as the healthcare community is in general. Susan DeVore, Chief Executive Officer for Healthcare Services Company Premier, that's based in Charlotte, North Carolina. Interesting, Lisa, that it seems to be, as Susan was suggesting, the most immediate concern is kind of that protective attire for healthcare workers, masks and gowns, and we've seen that in some other countries where healthcare workers have in fact become infected in pretty big numbers.
Yeah, I've been reading articles about how there's a concern because you need to have more than one mask a day for all the healthcare professionals, and if you wear it for too long, it then isn't sanitary. That's an issue. There's also an issue of just healthcare professionals themselves. Are there enough?
Yeah, very interesting. We'll obviously be following up on this story. Right now, let's head down to our 99.1 studios in Washington, D.C. for world and national headlines with Nathan Hager. Nathan, what do you have?
Well, Paul, President Trump is reportedly considering disaster declarations for states dealing with the coronavirus. The New York Times reports it is one idea the White House is floating as it continues to formulate its fiscal response to the outbreak. Declaring a disaster would allow FEMA to distribute aid without waiting for Congress. Centers for Disease Control Director Dr. Robert Redfield is defending the government's response to the outbreak so far to lawmakers on Capitol Hill.
With LabCorp and Quest both operational as of yesterday, there's really laboratory testing availability to any doctor's office that can go through LabCorp and Quest.
And this morning, Health Secretary Alex Azar told CNN there are more tests available than needed. New York Governor Andrew Cuomo disputes that, saying testing capacity needs to be increased. Bloomberg's Amy Morris reports lawmakers are at work on a second coronavirus bill.
This is on top of the first roughly $8 billion measure signed by the president last week and separate from the president's proposed payroll tax cut. House Democrats want to introduce another coronavirus response bill as soon as possible, providing free testing, expanding unemployment insurance, and allowing for paid time away from work. House Appropriations Chairwoman Nita Lowey says she wants a vote in the House by the end of the week. House Speaker Nancy Pelosi says it might have to wait until lawmakers return from recess week after next. In Washington, I'm Amy Morris, Bloomberg Radio.
For the third time in as many days, Joe Biden has picked up an endorsement from a major national gun control group. The Newtown Action Alliance is backing the former vice president. Michael Bloomberg, founder and majority owner of Bloomberg Radio, parent Bloomberg LP, has endorsed Joe Biden for president and donates to groups that support gun control. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Our relationship with Asia is simple. Find the most experienced journalists.
These countries will need each other more and more in the future.
Let them gather the best data and experts.
Let's get to Singapore now and our guest.
Then bring everything they find straight to you.
Let's talk about where you are. There's quite a lot of headwinds there too.
Actually, it's not simple. It's just better. Bloomberg Daybreak Asia, tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business and BloombergRadio.com. Bloomberg, the world is listening.
Hope you enjoyed your meal. And I just want to say, he's lucky to have a brother like you.
Lucky? Caring for my brother is far from easy. But he's a part of me, like my arms and legs, so I'll be his. No time for tired. Nothing can disable this love. He needs me, but I'm the lucky one, even though I need help now and then.
If you're caring for a loved one, visit aarp.org/caregiving for care guides and community support for your strength. Brought to you by AARP and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies. Bloomberg's ever-expanding technology, data, and news news and media services, foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
To buy your home, you became a house hunting ace, learned about loans, scoured neighborhoods, and asked the right questions. Now you're queen of your castle. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll feel empowered to own your retirement like you own your home. Go to aceyourretirement.org, because when it comes to clearing financial hurdles, you're an ace. Brought to you by AARP and the Ad Council.
Welcome to Costa, the nation's favourite coffee shop. What can I get you?
A flat white, please.
And would you like to enter the 10 million point Costa Coffee Club giveaway?
Yeah.
And collect points towards free coffees and treats in store.
Thank you.
You're welcome.
Registered Coffee Club members only. 18 plus, GB only. Excludes Northern Ireland. Purchase required. 9th of March to 5th of April. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details and T's and C's.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
All right, Stan, will my mortgage rate go up?
1955 was the last time Newcastle won the cup.
No, try not to mumble.
Playing, let's get ready to rumble.
Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
It's a new day. Grab the bull by the horns of ambition. There's 2 U's in future. Which do you want to be?
Or leave the motivation to Vitality. With our health insurance, you could get the Apple Watch Series 5 to help set your goals. From just £99 up front with nothing more to pay if you stay active. Search Vitality Health. Life's better with Vitality. Upfront payment varies starting from £99. 18 plus selected models only. 24-month credit agreement, variable direct debit. Available on certain Vitality plans. Minimum premiums, terms and exclusions apply.
Heroes. They're the ones we look up to, or sometimes down at, if they're under your sink, mending a broken pipe. Whether it's plumbing to plastering, heating to electrics, at Local Heroes, every job completed by an expert tradesperson comes with a 12-month British Gas guarantee when you pay online. So, if it needs fixing, there's a local hero for that. To get a quote, search Local Heroes. Terms and conditions apply.
This week on the New Yorker Radio Hour, we'll ask whether America is ready to elect a Democratic socialist for president. Plus, the science fiction legend William Gibson on climate change and the end of the future.
How often do you hear the phrase, the 22nd century? Don't hear it. We no longer have that sense of cultural anticipation.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and tune in on Facebook, Twitter, and Instagram to get the most out of Tune In.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Coming up, we're awaiting comments from former Treasury Secretary Lawrence Summers. He's speaking with Bloomberg anchor David Weston. We'll have that for you in just moments. Quick data check here, Lisa. Looking at the S&P, we're up 33 points. That's up 1.2%. The Dow up 217 points, 206 points. Sorry, it's up about 0.9%. NASDAQ up a little bit better. Tech doing a little bit better here, up about 1.4%. So green on the screen, but well off the highs that we had earlier today. Looking at the Treasury market, the 10-year's down 14.30 seconds, pushing the yield up just slightly, 4 basis points to 0.58%. The 30-year, we're back above 1%, 1.04%. So a little bit of a clawback in the Treasury market. Again, I think a lot of action here in the energy markets. We've got WTI crude up 6.4% after that historic 20% plus sell-off yesterday.
Yeah, there was a rally that really was banking on Washington, D.C. coming through with something, but we are getting reports that President Trump is not necessarily prepared to unleash some sort of specific detail about the plan, and we are going to hear more about that throughout the day. Right now, though, to get a view on what the government could, should, and would be doing, former Treasury Secretary Larry Summers, with plenty of experience through crises and otherwise, leading the Treasury Department of the United States, speaking with Bloomberg anchor David Weston, sitting down to try to cast this both in historic terms as well as push it forward to the future and what we should expect and look for from the government. Let's listen in.
Bloomberg contributor. He is Larry Summers. Of course, he's former Treasury Secretary, among many other things. He's joining us from Cambridge, Massachusetts. So, Larry, thank you very much for being here. We are going to...
Particularly if a significant part of the stimulus is going to employers who choose to retain their workers, who choose to offer sick pay for their workers who get caught up in medical problems associated with coronavirus. But I don't think anybody can think that tax cuts of the kind we've gone to the well with in past recessions are sufficient at a moment like this. There are complex financial issues with maintaining the flow of credit on which the Treasury and the Fed need to partner. There's urgent need for developing adequate infrastructure and facilities for testing and treating and, where necessary, quarantining people with respect to these problems. We are not an island in the world, and unless we cooperate with other countries, what no one country does is going to be sufficient to contain this problem. So I'm glad to see the president recognizing the role of fiscal policy, but as I've been saying now, I think we need a plan that is coherent, that is coordinated, and that is comprehensive. And we don't need a set of ad hoc measures with people going around congratulating themselves for having come up with a measure or a proposal. We need to be thinking about what we want to be doing today to put ourselves to be in the right place a month or 3 months from now. So yes, the impulse to fiscal policy is probably appropriate. I don't think the levels that people are talking about in the low hundreds of billions of dollars are likely actually to be sufficient in the context of more than a $20 trillion economy. I think we've got to recognize that the risks are very much on the side of underdoing it.
So exactly, and that goes to the question of how big is the breadbasket here. I remember back in 2009, there were a lot of questions being raised about whether, in fact, we stepped up big enough in the fiscal stimulus. And many economists thought we did not do it big enough. Do you have any sense of magnitude that would be required sufficient to accomplish what you're talking about?
I think we'd better have an apparatus in place that will enable us to be spending at a rate of above $500 billion a year by the end of the summer. I'm not certain that all of that will be necessary, but we've got to have the capacity to be spending at more than that rate, and it wouldn't surprise me greatly if we had to escalate beyond that. I think the odds are 80% that we will have a recession, and we need to have contingency planning for a likely recession, and we need to do that planning with the awareness that a serious inflation problem really looks very unlikely from here.
So one of the people you used to work with actually used to say that you don't want to let a good crisis go to waste. Is there a possible upside to all this? You've been very concerned about secular stagnation. And we talked actually with Philip Hildebrand. He's vice chair of BlackRock earlier today, and he invoked your name saying maybe we could have enough fiscal stimulus here to get past that secular stagnation. This is what he said.
This may also be an opportunity where we look back, you and I, hopefully 5 years from now, we could say, that was the moment that kind of got us out of this secular stagnation trap, for lack of a better term, to get what Larry Summers calls escape velocity. Whether that will happen, who knows? But I think that's where the market is going to really focus on government action in the months to come.
Larry, is that hoping for too much? This could actually give us escape velocity?
I hope so. It will take our being willing to act more decisively and more ahead of the curve than we have traditionally as the economy goes towards downturn. That's about fiscal policy. That's about public investment in infrastructure. That's about the Federal Reserve's actions in spurring the flow of credit. Frankly, the announcement yesterday about the Fed kind of hopes that banks will lend more struck me as being empty and not very well specified. So I think there's the prospect that we will use this as a moment to push forward on the economy, but we can't just assume it'll happen.
So Larry, you've talked in the past about the fact that it's not so much the price of credit, but it is the availability of credit. We're seeing some real pressure in the credit markets now because of the oil price war that's going on. There are some economists now who are saying it's not so much the interest rates from the Fed that we need. We don't need cuts in interest rates. We need infusion of dollars, whether it's through repos, whether it's through FX exchanges, FX swaps, things like that. Is that right? Do we need an infusion of dollars? Is that part of the solution here?
There's a global dimension in terms of avoiding a dollar scarcity. There's a liquidity for financial institutions dimension that's essential. There may be the kind of issue that Europe has been meeting for some time with providing funds to banks on very favorable terms so that they can on-lend it to companies that are facing difficulties in credit markets. It's all availability from here. Nobody's basing their investment decision on whether their interest rate is 50 basis points or 20 basis points. And so I think a focus on the best means of making credit available is very much the right thing for the Fed to focus on. And that will involve cooperation between the Treasury and the Fed, because there'll be degrees of risk, tranches of risk that might be appropriate for the Fed to take on. But the main risks, if there's going to be taking on risk, that's an appropriate role for the Treasury and for elected Democratic, small d, Democratic officials to make. There's some risk that some of the things we did after the financial crisis that would make the emergency provision of credit more difficult may complicate things. But I think that just as there were break-the-glass plans during the 2008 period, there needs to be contingency planning for major credit issues. We shouldn't take a day like today when markets rebounded as any kind of lull or ground for complacency.
Should we be putting on the table some relaxation of some of the regulations that went into effect with respect to the banks that did make the banks unquestionably safer, but maybe we should look back and look at sort of some of the reserve requirements and things. Is it time to look at that?
I'm not sure we should change them on a structural basis. What I do think is the reason banks have capital and the reason banks accumulate reserves is so that when there's an emergency, they can spend down and keep flowing credit. And now we have an emergency. And so it may be a time for strategic forbearance. That's what, if I were in government right now, I would be convening the financial authorities at the Treasury, but from the financial regulatory agencies to look at what made sense. We certainly don't want to sacrifice the gains we've made on financial stability in the last few years. But on the other hand, the only reason to have capital is to use it in an emergency. And this is increasingly feeling like a pretty serious emergency.
And is this a time when you get together with the big banks and basically talk this through? I mean, you've been in the room in a different circumstance. Is that what should be going on?
I think we're certainly at a stage where we should be hearing what their ideas are, getting their assessment of credit market conditions. But gosh, I think there needs to be complete clarity of a kind that, frankly, there hasn't been in some of the president's rhetoric, that the big banks are a means to an end. The objective here is not to have there be liquidity for big banks or to protect the shareholders of big banks. The objective is to maintain the flow of credit, to maintain the level of employment, and to maintain the flow of funds in the economy. And that's the objective. And then the question is, how can big banks be a means to that end? But it's very important, and I sometimes think the Secretary of the Treasury isn't entirely with this point, that it be recognized that the big banks are a means to an end, not the ultimate test or the ultimate objective of our economic policies. The ultimate objective is the well-being of middle-class Americans.
Okay, Larry, thank you so very much for joining us again today. That's former U.S. Treasury Secretary Larry Summers. He was with us for today's Wall Street Week update on Bloomberg Television and on Bloomberg Radio.
Thank you so much, David Weston. Really interesting interview with the former U.S. Treasury Secretary at a time, where all the focus really is on the fiscal stimulus side. What is the response going to be from Washington, D.C.? And as they were speaking, I should note that markets, the Dow completely erased its gain from earlier, is now slightly negative, and the S&P and NASDAQ barely positive after, really pairing pretty significant gains earlier in the day, whipsawing people trying to get in action. And we'll try to get some sense of exactly what's triggering what, but it's hard to put a narrative to the whippy action that we've been getting. I will say from that interview, one standout point to me is that Larry Summers said that there was an 80% chance that we were going to enter a recession as a result of what we are seeing and just given our economic backdrop.
Yeah, and I don't think that number or that forecast is in the marketplace, so that may have had some impact. Also, he's talking about the federal stimulus, putting a number on. He thinks it needs to be $500 billion on an annualized basis by the end of the summer. So a big ramp up. Yeah,
and right now, based on what we are hearing, I'm not sure that there is the political ammunition or will to do that at this point. Meanwhile, just in the market, S&P also turning negative now after being positive by more than 3% earlier in the day. Let's get more on what's going on in markets and the numbers there. Greg Jarrett has that for us with the Bloomberg Business Flash. Craig.
Hang on, Lisa. I'm putting on my crampons. It's getting slippery out here. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. Someone has been busy with an eraser while you were talking. The S&P 500 is up less than 0.1% now, up 3. The Dow is down 0.1%, down 35, and the NASDAQ is up 0.3%, up 28. The 10-year is currently down 11/32 with a yield of 0.5745%. West Texas Intermediate's up 2% right now. Excuse me. It is up 6% right now at 33.05 a barrel. COMEX gold is down 1.1% at 1656.50 an ounce. The dollar yen is at 103.47. The euro is $1.1382, and the British pound $1.2990. That's a Bloomberg Business Flash. I'm Greg Jarrett. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Looking at crude oil today, WTI up 6.2%. That's to $33 and about 3 cents a barrel. That's after yesterday's 24.5% decline. Just extraordinary. The biggest decline since 1991, the Gulf War. To get a sense of what's going on in the world of global crude, we welcome John Kilduff, founding partner for Again Capital. John's based in New York City. So, John, I want to go back just a couple days ago and ask my fundamental question about global oil. What were the Saudis thinking?
The Saudis, nose got out of joint, or however you want to put this. I mean, they were quite exercised about the Russian position at the OPEC meeting. And when the Russians sort of stuck it to them and said, you know what, everybody can pump whatever they want come April 1st, because that's when this deal ends, the Saudis quickly came together and decided to show the world what the price landscape looks like if Saudi Arabia can pump whatever it wants. And they unleashed a thermonuclear bomb on the oil market with several provisions slashing mightily their pricing scheme. They cut their cost of crude or offered price to their customers by over $10 a barrel. You heard how they are ramping up mightily. The latest this morning is that they're going to go to 12.3 million barrels a day next month. So that means they're going to be taking oil out of storage. I mean, it is just a throwdown by them of the first order.
So, John, given that we're in a thermonuclear fission throwdown explosion of a bomb. I know. I love it. Given what we're dealing with in terms of both the knockdown in demand as well as the increase in supply, why have we seemed to have found a bottom if you view yesterday and today's action as anything?
Well, first of all, there's still some hope in the market that cooler heads will in fact prevail. There's some talk that the Russians are regrouping themselves to maybe do a rapprochement with Saudi Arabia and try to maybe get cobbled back together some kind of deal. Also, too, there was a pretty swift reaction from several of the U.S. oil producers, ranging from Diamondback Energy to ExxonMobil. And as a result of that, we should be seeing some demand or production response here in the U.S. Rig cuts, production cuts, pullback on investment going forward. So the market, found a bottom down around $27 and bounced off that. And I think that's sort of the scorched earth number for now.
So, John, in this throwdown between Saudi Arabia and Russia, who's got the stronger hand, do you think?
Saudi Arabia by far. First of all, they have the lowest cost of production of any country by far. Low single digits. That was in their Aramco IPO disclosures. As you've been seeing from some of the palace intrigue too over the weekend, there's a consolidation of power there. The king and Mohammed bin Salman are firmly in charge with an iron grip. Not so sure you can say that about Russia if there's an extended low price environment for oil. It would knock the Soviet Union off its block back in the day, and Vladimir Putin and his government will start to feel pressure if the price stays low for long.
So logically, it doesn't seem like this benefits anyone, and it would seem to behoove everyone to come to the table, shake hands, pull that flag back up that was tipped over in the OPEC meeting on Friday, and call it a day and get back to negotiating. That said, this is not that, and it doesn't seem like that's going to happen, at least in the next few days. What do you think it's going to take? What's the tipping point when it comes to either the price of oil or the magnitude, the length of time before they come to the table?
It'll probably be several months. This was the ultimate lever for Saudi Arabia to pull. I mean, I've talked about this in the past or over the years. This trimming output only served to support really the U.S. producers and other higher cost producers. They needed to get shaken out. The corollary for this is back in 1998 when pre-Hugo Chavez Venezuela tried to compete for U.S. oil market share. And the Saudis taught them and the market a lesson back then and cratered oil prices down to $8 a barrel. The U.S. oil industry in particular was hammered, and there was a lost decade or so or more of U.S. production that was really moribund and what helped to ultimately generate the $90 and $100 a barrel oil that we had lived through there for a while, which then finally encouraged the frackers to roll the bones again and get back in there. So, this is going to take some time. It's going to wait for a response. But it's certainly what the Russians wanted to have happen because they have their eye on the U.S. producers. I keep pointing to this weekly inventory report from last week that the government puts out. It's 10:30 every Wednesday. I know you guys cover it. And that last week's report, record U.S. production, 13.1 million barrels a day, and record U.S. crude oil exports of over 4 million barrels a day. The numbers were astounding. Right as they were heading into the OPEC meeting, I really still feel that was the trigger point for the Russian position.
So, John, just real quick, 30 seconds. How bad do you think this is going to get for the U.S. oil patch?
It's going to get rather bad. There's going to be a host of bankruptcies and consolidations, and we'll even have to keep our eye on some of the majors in terms of their ability to continue with stock buybacks. Looks like capital investments is going to go by the boards first, and that's going to end up lowering U.S. output and achieving the ultimate goal here of Saudi Arabia and even Russia, for that matter, deal with some short-term pain for some longer-term gain.
John Kilduff, thank you so much for being with us. We really appreciate it. John Kilduff, founding partner of Again Capital, joining us as oil tries to stage somewhat of a rebound, although off earlier highs. And after absolutely an epic day for oil, epically terrible day, a record day when you saw the sell-off, particularly when it comes to energy stocks and energy bonds, which gapped out in a way that has never really been seen before in terms of spread and price. Right now we're looking at crude traded on the NYMEX that was up as much as 6%, now off those highs, 5.4%, declining off the highs in tandem with this sort of sell-off, the retracing of any gains that we're seeing in equity markets right now as we await some sort of word, maybe not.
I don't think today.
DC. Well, maybe. I don't know. We've gotten conflicting reports, and we will keep you posted as we get them. Right now, the Dow down 0.3%. Right now, let's go down to Washington, D.C. Nathan Hager is there with all of the news. Nathan.
Well, one of the latest developments on the coronavirus outbreak, Lisa, is this. The Ivy League is canceling its upcoming conference basketball tournaments, men's and women's side, due to coronavirus concerns. As you mentioned, President Trump is expected to put out details of the economic stimulus measures that he plans to put out to deal with the fallout. But so far, those details are hard to come by. Congress has yet to be briefed. Democratic Senator Andy Levin tells Bloomberg Television any proposal needs to include more than a tax cut.
What we need is help for people if they become unemployed. We need enhanced unemployment insurance. We need paid sick leave for workers who may have to stay home, and they make such low wages to begin with, they're not going to be able to get by.
As we await those details, the head of the Centers for Disease Control is defending the government's response to the outbreak so far. Bloomberg's Irv Chapman reports from Capitol Hill.
Dr. Robert Redfield told Representative Rosa DeLauro, who chairs the subcommittee, that the nation's two biggest testing laboratories can now analyze the coronavirus test immediately.
Fairly quickly, we had a diagnostic test up and running. And I'm happy to say now, there's really laboratory testing availability to any doctor's office that can go through LabTour and Quest.
We are behind the curve in testing when South Korea can test 10,000 people in a day.
Dr. Redfield said that Europe is the new China as the epicenter for new cases, which is why the virus has come to New York. On Capitol Hill, Irv Chapman, Bloomberg Radio.
Global news, 24 hours a day on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries in Washington. I'm Nathan Hager. This is Bloomberg.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma.
The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go Go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
They don't chant your name when you give blood or sing songs about you. But patients and their families will remember you forever. Because your blood can change their lives. We need more blood donors in Tooting, the West End and Edgware. Bleed for London. Join us today at blood.co.uk.
How do you channel your inner calm? Meditation? Yoga? Or within the sanctuary of your Citroën C3 with 11 driving aids and wide, comfortable seats? Calm really does come from within. Citroën C3, now £199 per month with an initial rental of £199 and £500 of list price.
Citroën.
Citroën UK Limited, a credit broker, not a lender. Personal lease, you will not own the vehicle. Offer on field PureTech 83 manual. 6,000 miles per annum. Guarantee may be required. Terms, eligibility criteria and return conditions apply. PSA Finance UK Limited. Participating dealer stock vehicles ordered between 1st and 22nd and registered by March 31st.
The government has coordinated and streamlined its coronavirus messaging, but is it the right message?
What's really necessary is for the people in the government who don't know the details to stop telling us things like there will be a vaccine in 1 year. Stop it. That's not helpful.
Making sense of the noise and the silence on this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon N.A. Member FDIC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Right now, let us go straight to the Roosevelt Room in the White House, where Vice President Mike Pence, and President Donald Trump are meeting with health insurance chief executive officers to talk about the coronavirus response. Let's listen in.
On behalf of the President, when I say how grateful we are for the collaborative spirit, the generosity, and the partnership represented by the great companies at this table.
That's true, very true. And we are working very closely with the cruise line industry. And very, very closely. They're taking very strong steps in terms of people going on and going off. But they're spending a lot of money, and they are working very hard, and we're going to be helping that industry. Likewise with the airline industry, they're taking very, very strong steps for people coming into our country, even getting off the planes. So we are working very closely with them. We're helping them. They're two great industries, and we'll be helping them through this patch. And so far, I think it's been going very well. You know all about the big ship that came in yesterday, and that's going along incredibly well, working with the state of California successfully, very successfully, also with Canada and with UK. So the UK is taking their people, their citizens back, and Canada is about 600 people. They're coming back. They're being met and brought to planes and being brought very, very, in a very, very dignified fashion back into Canada. So we appreciate all of the help we've had in that, and that's working out very well. With that, I might just ask a couple of folks if you'd like to make a statement on behalf of the industry. Perhaps, would you like to make a statement on behalf of the industry?
Sure. This is Gail Boudreau, and one of the things that I think is most important is from day one, as an industry and as a company at Anthem, we have been very focused on ensuring access to care, and that cost is not an issue for people to have the testing appropriately done. So we're pleased that we're able to continue to expand this access. And as the President said, I think it's really important for all of our customers, our members, and the American people to have this. So we are very supportive of the efforts underway.
Great job you're doing. Thank you very much. Anybody else? Would anybody else like to make a statement? Even the ones over here, you can turn your head. Look at those cameras.
I'll say on behalf of the industry, we represent the great companies around the table here, but then those that operate at a local level, that we all have the same commitment to making sure that cost is not a barrier to people getting tested and treated. We want to make sure that we're focused on prevention, testing, and treatment, and getting that information out as quickly as we can to make sure people know how to limit the spread of the disease.
Very good. Thank you very much.
Mr. President, on behalf of the 36 independent Blue Cross Blue Shield plans that insure 1 in 3 Americans, we're pleased to make sure that people have access to the test, to the coverage that they need. I also want you to know that the commitments we've made also apply to the Federal Employees Program, where we insure over 5 million employees.
That's great. Thank you. Thank you all. Maybe. Please.
I would just like to say, as a large servicer of Medicare, that we are very oriented to the aging population, and most importantly, how do we make it as easy as possible for them to receive their test? And being able to do it in the home is a very important part of that. And so when we think about telemedicine in home, it reduces great barriers to allow them to have the testing.
And a lot of people now are taking advantage of that, really strong advantage. Who else would you suggest?
Dave Whitman.
Dave, please.
Mr. President, thank you for having us first and foremost. And I guess just to extend the conversation here, we're working very hard to protect the health workforce, which we think is essential to ensure that Americans have access to the proper care. Getting the health workforce back to work so quickly, testing tested and back serving patients is a high priority for us as an organization serving somewhere around 18 million patients across America.
Thank you. And Governor, Peter gets Nebraska, everybody. Nice to see you.
Mr. President, I just appreciate your leadership and the Vice President's leadership to work with the governors to be able to make sure we're keeping people healthy in our states. It's been a fantastic cooperation at all levels of government. We really appreciate also all the cooperation of all these executives around the table to make sure that the people in my state and all the states across the country will be able to get the test and not worry about it.
Right. Great thing. Thank you all very much. Thank you. Thank you very much, everybody.
Mr. President. Mr. President, your former Homeland Security Advisor just said we're about 10 days away from the hospitals getting
I said, is he still going to Capitol Hill?
We've been listening to President Trump and Vice President Mike Pence at a roundtable discussion with health insurance chief executive officers in the Roosevelt Room in Washington, D.C. to discuss the coronavirus and the possible response, discussing the idea of insurance for people who want to get tested and cared for. Paul.
Yeah.
What was your take?
It's interesting. I think the insurance industry is trying to, and the healthcare industry, obviously, trying to get the point across that they will make every effort on their parts to make sure that U.S. citizens can get access to the tests, can get access to care. There's been, so I think it's just voicing at this early stage here in the United States, voicing a kind of a solid front that some of the health insurance industry is united and committed to ensuring that that they provide a good response here to what is a developing story.
Right now, we're seeing the market try to stay in the green. We're seeing the Nasdaq up about 0.5%, the S&P up 0.25%, Dow basically flat. But the reason why I bring up the markets here, because there are two sides to this. There are many sides to this. There's the economy and their markets, and then there's the human side of it and the guidance that people are getting or not getting. And I just have to say, it's been really conflicted. I mean, there's certain areas where schools are closed, certain areas where people are being told to avoid public gatherings, other areas where they're not, other things are continuing to be held. There's sort of an uncertainty, and frankly, I feel it as well, which is, do you buy tickets for stuff?
Yeah.
Do you go places? I mean, right now, sure, but just don't go in the locker rooms if you go to sporting events like we do anyway. But you know what I'm saying?
Yeah.
There's a question here.
There is. I mean, to the extent people are looking for a federal response, a federal guidelines, haven't necessarily received that. I think what the market was thinking about this morning, based upon some comments from President Trump yesterday, that there would in fact be a federal response talking about economic relief, and we did not get that today. So I think that's kind of took some of the wind out of the sails of the markets. But I think not just investors and markets, but I think American citizens across the country are looking for, again, some kind of more consistent guidelines, do's and don'ts, and trying to really get a sense of kind of how they should navigate their lives. What looks like to be, a period that's measured in a number of weeks, and hopefully not a number of months.
I'll tell you this. My son, who's in 6th grade, my older son, he was talking last night. He was very excited about the idea that schools could be shut down. And he was bringing it up. I mean, of course, he's excited. We're all completely freaking out, figuring out what we're going to do in different situations. But, he was saying, well, my school's already allowed and enabled all the work to be on a computer, and I could access it, and I can work from home. They're already coming up with the contingency plans because they can't wait for somebody to give them that guidance. But there isn't necessarily some sort of unified directive coming from all cities, all urban centers, let alone even within specific urban centers right now.
No, there isn't. And, I think that's one of the issues. I think people would like to see some more federal guidelines coming out here. But in the absence of that, we're having states and local authorities, and as you mentioned, even local school boards, kind of taking matters into their own hand based upon the conditions in their local communities. And, one of the things for the airlines, talking about the airline stocks are trading up today because President Trump talking about some aid to those airlines. But the question is, do you even get on a plane and travel? And we've seen major corporations in this country rescind travel completely immediately. So there's different, while some companies have had no policy whatsoever. So a lot of uncertainty there. So it's just kind of getting up to speed.
Indeed. Right now, we are seeing the market again pair some bigger losses, bigger gains, bigger losses is swinging around right now. But we are going to keep you posted. This is Bloomberg Markets.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your local listings.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Welcome to Costa, the nation's favourite coffee shop. What can I get you?
A flat white, please.
And would you like to enter the 10 million point Costa Coffee Club giveaway?
Yeah.
And collect points towards free coffees and treats in store.
Thank you.
You're welcome.
Registered Coffee Club members only. 18 plus, GB only. Excludes Northern Ireland. Purchase required. 9th of March to 5th of April. The question, what is your favourite branded coffee shop, was asked. See costa.co.uk for full details and T's and C's.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Stocks wiped out a gain that reached 3.5%, and yet another wild session on Wall Street as signs mount that stimulus promised by President Donald Trump is not imminent, even as the coronavirus threatens to upend the economy. Volatility continues to grip global financial markets, rattled by the virus and an all-out oil price war, though oil does still seem to be trying to come back a bit. Dennis Gardman, former publisher of the Gardman Letter, tells Bloomberg he thinks that oil can go much lower.
This is a real unmitigated war between the Saudis, between the Russians, and actually between our fracking industry. And I'm not sure who's going to win, but I think lower prices are still coming ahead. Can we get down to $15 a barrel? I think it's very possible in the next year or two. It will absolutely destroy the fracking industry in the United States.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 has edged back into the green now. It's up 0.6%, up 16. The Dow is up 0.4%, up 96. And the NASDAQ is up 0.8%, up 66. The 10-year is down 19/30 seconds. The yield is 0.60%. West Texas Intermediate crude, of which we spoke earlier, is up nearly 7% at $33.29 a barrel. COMEX gold is down 1.3% at $16.5320 an ounce. The dollar yen is at 103.78. The euro $1.1346. And the British pound $1.2942. Netflix's international growth rates could be at risk due to the coronavirus. This according to Needham, which dismissed the idea that the video streaming company would see a tailwind from people staying at home to avoid the outbreak. Right now, Netflix is up 2.5% at 355.02. The U.S. housing market, which was headed for a hot spring selling session, may not be so healthy after all, as the expanding coronavirus outbreak slows economic activity, roiling markets around the world, where there's at least a 60% chance of the economy going into recession, according to Mark Zandi. Our earlier guest, Mr. Lawrence Summers, said the chance was closer to 80%. Now, that's a Bloomberg Business Flash. It's time now for us to return to Balance of Power and David Weston. This is Bloomberg.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should
should be sanctioned. We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world. Balance of Power with David Weston on Bloomberg Radio.
President Trump promises very dramatic action to support the economy. 6 states head to the polls for presidential primaries today, and markets try to stage a comeback after an historic loss yesterday. From the Bloomberg Interactive Brokers Studio, welcome to the second hour of Balance of Power. What goes down must come up, at least at some point, and maybe but not as much as it went down. That's the story of the markets today as they take a breather from the dramatic sell-off of yesterday. To take us through what's going on, we welcome now Candice Bangsund. She is Vice President and Portfolio Manager at Fiera Capital. So Candice, thanks so much for being here. I mean, the markets were up 2-3%, and now they're down hovering around 0.5% or something like that after having dipped into the red a little bit. So what is going on?
Yeah, well, markets are clearly being whipsawed this week and largely reflecting that underlying fragility in the financial markets in general and the heightened levels of uncertainty in the wake of accelerating cases of the coronavirus and, of course, the oil price war over the weekend that has added to an already fragile and panic-stricken backdrop. So I think it's just underscoring that underlying uncertainty in the market. And we're seeing some very dramatic moves both on the down and the upside.
And how much of this is sort of hoping for something coming out of the White House this afternoon? Because yesterday in the news conference, President Trump did say there's going to be something very dramatic, were his words. How much of this is the markets hoping something's going to come through on the fiscal side?
Yeah, so on the upside for equity markets, and clearly why markets opened so strong this morning was largely on speculation that governments will unleash some fiscal stimulus measures to help to stem the damage from the coronavirus. Because of that, that's of course what markets are waiting for right now. With monetary policy clearly at its limits, we're going to need a more concrete fiscal response. And I think that's largely what was driving the risk-on move this morning. And of course, lack of a lot of detail at this time has seen those gains reversed here.
At the same time, we've talked about the oil situation, which is really quite dramatic on top of all this, where we had maybe a deal or a proposed deal, and then it blew up, and then basically Russia and Saudi Arabia are going at one another on a price war.
Oh, absolutely. That was a very dramatic development over the weekend, and of course, adding to that downward pressure on the markets going into Monday. This has created even more uncertainty in an already very fragile backdrop. So trying to assess the ramifications there, particularly as it pertains to the credit channels, energy companies, how they're going to adapt to this lower for longer environment.
And, of course, the bonds, they've come back a little bit. Actually, the yield has come back up a bit from where they were. We have had historic low yields in U.S. Treasuries.
Yeah, bond markets are, again, they're looking for more monetary stimulus, of course, and largely pricing the worst-case scenario of a full-blown global recession with yields broadly at record lows across the board. It's just been unprecedented, the decline in bond yields that we've seen, and, of course, wagers for increased central bank support pressuring those even lower.
What about the recession possibility? We talked to Larry Summers just a bit ago, and he said it's like 80% likely now. Other people are saying it's almost baked in. Certainly the markets are pointing in that direction. How do you take that into account when you're thinking about investments?
Yeah, so we've actually raised our global recession scenario here as well in the last month, just due to the uncertainty regarding the status of the coronavirus outbreak. We don't know essentially how far-reaching the virus will be on the global scale. So this, of course, does have the ability to, tip the scales and send the global economy into recession. So from an investment standpoint, a lot of this we believe has been priced into the market. And so we've resisted the temptation to sell into this weakness and into this panic until we get a little bit more clarity on the outbreak itself, particularly peak cases in the developed world, in U.S. and particularly in the U.S. and Europe. But also the fiscal response, because inevitably we do expect a near-term slowdown, but all of the stimulus that's come into an already abundant liquidity backdrop should help to revitalize the global economy later this year. But of course, we'll need more detail. So for now, we're patiently awaiting a little bit more clarity on those two things, the outbreak and the status of the outbreak, and of course the fiscal response.
Do you have any sense of how much of this is the exogenous shock from the coronavirus as opposed to a market, particularly equity markets, that were sort of out over their skis? I mean, they were, I think most people thought, very fully valued before this happened. It didn't take much to set them off. Or is it really the coronavirus?
I think it's a little bit of both. Equity markets were clearly due for a healthy pullback and largely susceptible to some negative news and uncertainty. So I think that's a lot of what's been driving that downside. But that being said, the coronavirus itself does pose some notable risks to, corporate earnings and the global economy in general. So I think it's a combination of both. But for now, it's largely a crisis in confidence. We've seen that in multiple contraction in equity markets broadly. So I think equity markets were likely due for a pullback, a healthy correction, but our expectation is that the uptrend does resume later this year once we get a little bit more visibility on the outlook.
How important is it that authorities coordinate what they're doing, either the monetary or across borders? Because we now have, for example, the ECB going to be coming out with their decision on Thursday. We've got a fiscal plan promised from the White House maybe as early as today. How important is it for the markets that it be coordinated?
I think it's very important because the reach of the coronavirus outbreak and the impacts are becoming more global in nature. Obviously, we've seen the biggest impact in China, but Chinese policymakers have been very aggressive, both on the monetary and the fiscal front, in helping to stem that damage. Now that's spilling over into the developed world as well. So we're going to need policymakers to step forward and help to restore and rebuild confidence, particularly on the monetary front, because you can argue that lower rates aren't going to stem the virus or even revive global growth, but they're going to keep the markets calm during this uncertain time. So not surprised to see the Federal Reserve last week with its emergency cut, the Bank of Canada. This week we're going to see the ECB, Bank of England. I think it's very important that we get a coordinated response, but more importantly on the fiscal front. Even
looser monetary policy. Okay, many thanks now to Canada's banks and Fiera Capital. Coming up, Johns Hopkins expert in influenza is here to explain the coronavirus to us. That's coming up on Balance of Power on Bloomberg Radio.
We can't always tell, but 1 in 5 people in the UK are disabled. So when we're all heads down, stampeding and charging because we're late for the bus or train, we could be doing more harm than we think. So let's not forget about the people we share our journeys with. Let's slow down a bit. Remember, it's everyone's journey.
Matt Letizia, what did you make of that performance today?
Well, it really was a game of two halves, to be honest, Jeff. Leicester came out in the first half really...
Letiz?
What's up, Jeff?
Run for it!
What the...
Move over, football. Cheltenham coming through. And Sky Bet are on the charge with a roaring first race special every day of the festival. Sky Bet. That's betting better. Applies to first bet on the first race at Cheltenham on the main race market only. Place terms apply. Eligibility restrictions. Offers vary each day. Check site for details. T's and C's apply. 18+. BeGambleAware.org.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
After a heavy morning in the green, stocks are now swinging between gains and losses in another wild session on Wall Street. Investors are trying to speculate on the timing and size of any stimulus promised by President Donald Trump to fight the coronavirus economic impact. We check the numbers every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is now up 1.25%, up 33. The Dow had been up at the open at about 1,000 points. Now it's up 253. That's up just 1.1%. The Nasdaq is up 1.6%, up 126. The 10-year is down 24/30 seconds with a yield of 0.61%. West Texas Intermediate crude oil is up now 7.5% at $33.50 a barrel. COMEX gold is down 1.25% at 16.5470 an ounce. The dollar yen is at 104.24. The euro is $1.1345, and the British pound $1.2921. That's a Bloomberg Business Flash. I'm Greg Jarrett. Now more Bloomberg Balance of Power with David Weston on Bloomberg Radio.
Thanks very much, Greg Jarrett. From the Interactive Brokers Studio, this is Balance of Power on Bloomberg Radio. There's a lot of information and misinformation out there about the coronavirus, how bad it can get, how dangerous it is, and what we can do about it. Vice President Pence, speaking at the White House just minutes ago, tried to reassure the public.
The risk of contracting the coronavirus to the American public remains low, and the risk of serious disease among the American public also remains low.
We welcome now Andrew Pekosh. He is director of the Johns Hopkins Center of Excellence in Influenza Research and Surveillance. Dr. Pekosh specializes in the study of viruses that affect the respiratory system and how they interact with our immune system. So, Doctor, thank you so much for being with us today. Let's first address exactly what Vice President Pence said. He said that the risk of contracting the coronavirus to the American public remains low. Is that fair?
That is fairly accurate. I mean, most parts of the country are not seeing sustained person-to-person spread at this point in time. Many places are reporting individual cases that are associated with exposures or travel. So, places like Washington and parts of California, the situation is very different. But in most of the country, we're not seeing sustained local spread of the virus.
Do you expect that we will, given what you've seen over in Wuhan, in central China, and for that matter, what we're seeing right now in North Italy, because it seems like this bug in other locations has sort of jumped out of just people coming over who've been visiting someplace foreign?
Yeah, and I think that many public health officials are now starting to use the words mitigation as opposed to just simply isolation. And what that really means is that we're going to start thinking about other the virus, because many parts of the country are going to expect to see spread from person to person in localized settings. And when that happens, while we'll still be identifying cases and isolating cases, other measures may come into play to help us counter the effects of the virus.
So what sorts of things are we talking about canceling sporting events, making sure that we don't have large groups of people get together?
Yeah, that's one of the basic things that will probably be instituted when in a local area when spread is occurring there. Canceling large events, trying to limit transport in and out of particular areas. All of these things will be things that will be put into place when localized spread is occurring.
What have we learned, going back to Wuhan and for that matter northern Italy, what have we learned thus far about how effective we can be at least slowing the virus down?
Yes, there are several countries that have been incredibly effective in limiting virus spread. Countries like Taiwan, Singapore, Japan to some extent have been very good at limiting the spread. What we've also seen, though, is if we let down our vigilance, we can see relatively rapid, widespread movement of the virus throughout a region, like what we saw in Italy.
To what extent are we flying, if not blind, at least visually impaired, because we have not tested that many people yet? It may be that a lot more people have it or even have had it than we know about.
Yeah, and I think that's a very fair point. I think that the realization a few weeks ago of how many people are suffering mild symptoms really caused public health officials to put this whole outbreak into a brand new light. It's quite possible that we'll be seeing lots of individuals who suffered mild symptoms, maybe didn't even know they were infected with the coronavirus, never even thought crossed their minds that they were infected with it. We'll be identifying those patients, and so numbers should be increasing. What will be critical is to determine whether or not those patients are responsible for more local spread of the virus, and that's really where public health officials are now focusing their work on.
Because you really have studied viruses, not this one's very much like it, SARS and things like that, and how it affects the respiratory tract. Talk to us about this. Some of the reports we've heard that there's a huge difference between whether it lodges up in your throat or up higher in your respiratory system as opposed to gets down in your lungs, that there's a fairly modest number of people, but if it does, it's a real trouble. Is that unusual for this virus?
Well, if you compare this virus to the original SARS virus that occurred in 2003 and the MERS coronavirus, this virus appears to cause much less severe disease than either one of those two viruses did. But this family of viruses includes viruses that just cause a common cold in humans. And so it's not unheard of that you would see within this family of viruses the ability to cause just a mild disease. What's really striking about the disease, though, is the age component of that. If you're approaching 60 or older and have secondary medical conditions, your chance of getting very severe disease really does increase exponentially. So while we sometimes want to give one solid number about the case ratio and the death ratio from an infection, this is a virus that we really have to think about the age of the person that's infected, because if you're under the age of 60, you're more likely to have a mild infection. If you're over the age of 60, the risk of a severe infection increases dramatically. We have to keep that in mind and send that message out to people.
So thus far, essentially, I think we've left it up to local public health authorities to decide when to close schools, when to close public events and things like that. But from what you just said, should we be doing something more broadly with respect to a specific portion of the population that we think is at risk, no matter where they are in the country?
Yeah, and I think you're starting to hear that message come through, particularly from Dr. Anthony Fauci at the NIH. And that's, we really need to start messaging the elderly population in this country to be able to get them prepared to take even more stringent efforts to try to protect themselves from infection. But that doesn't mean that the rest of us shouldn't shirk our responsibilities, because the rest of us also have a responsibility to try to limit the spread of this virus in the community, not only to protect ourselves, but also then to provide that secondary protection to the vulnerable populations.
How do you evaluate the information that's coming to us from our political leadership? And by the way, I include in that not political, but Dr. Fauci. I mean, he's part of the government. How do you evaluate how the government's communicating with it? Is it accurate? Is it garbled? What do you make of it?
Yeah, so the message coming from the NIH and Dr. Fauci has been rather clear and been good and on target. I think the CDC is providing us with great information from their website. And, at the end of the day, public health is most effective at the local level. So all of us are going to have to start listening to our local, our county, our state, or even our city public health agencies to get fine-tuned information as to what we should be doing in a particular area. I also was excited to see the funding that the Congress recently approved, and my sense from talking to members of Congress is that they all understand that this is a first step in the process, and they all seem very willing to provide even more resources should that be deemed necessary.
Where do we need the resources right now? Even the 7.8 or 8.3 billion that was appropriated, where does that go?
So a good portion of that is going towards making sure our medical infrastructure is ready to handle a surge of patients. Much of it should also be going to local public health agencies, because they're the ones that are going to be on the ground tracing infections, dealing with the consequences of spread in a particular area. And a good portion of it, another portion of it is targeted to develop therapeutics and vaccines that might come into bear further on down the infection in terms of helping us control the spread of the virus.
Okay, really appreciate you being with us today. That's Andrew Pekosh. He's of Johns Hopkins. And coming up, we're going to be joined by Cameron Christ. We call him the macro man around Bloomberg. He's going to give us his take on the markets, which, by the way, are back up again. I'm looking at the LA equity markets. We're back up 1.5 on the Dow Jones and 1.6 on the S&P after having been down into the red a little bit. So they're all over the place. Cameron Christ will be here to explain it all to us. That's coming up next on Balance of Power. And this is Bloomberg Radio.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At Asda, with our great range of beers and cider, it looks like you're hosting. Get 2 packs for just £18 or just £10 each. Like 12 bottles of Corona or 10 cans of Copperberg Cherry. Cracking brands, refreshing prices. Don't compromise. Asda. Save money. Live better. Selected stores subject to availability. Offer ends 18th of March. 330 millilitres each. Drink aware.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn. When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You're listening to Balance of Power with David Weston on Bloomberg Radio.
A bounce is not necessarily a bottom. That's the title of Cameron Kreis's piece on the Bloomberg this morning, and we welcome him now. So, Cameron, I'm not even sure we can call it a bounce. It looks more like a bungee cord to me. I mean, it was up a ways, then it was down actually into the red a bit, and now it's back up. The S&P up about 1.6% as I look at the Bloomberg right at the moment.
Yeah, I mean, if insofar as a bounce, I guess at this juncture you could call it a dead cat bounce, as we say in market parlance, and as I'm sure you don't need a degree in physics to understand that dead cats don't bounce very far, very high, or for very long.
So what do we make of what's going on right now? What are the factors, do we think, if we know, that are driving the markets up and down and all around?
She was going to build.
Well, at this juncture, it's very, very sentiment driven, obviously, and part of that is because we just don't know what the outcomes are going to be, either in terms of public health or in terms of the economy, not only in the United States, obviously, but also in the rest of the world. And part of the issue is for the time being, it almost seems like a zero-sum game, and insofar as the measures that will produce best outcomes for public health or those that are likely to have the worst outcome for economic growth. I mean, look at what's going on in Italy, where they basically locked down the whole country. Hopefully, that will contain the spread of the virus. That's obviously highly detrimental to economic activity. And at this juncture in the United States, we don't know how far this thing is going to spread. We don't know what measures will ultimately be required to contain it. We can hope that they'll be relatively modest, but hope is not really the basis of a sound strategy. So the fact that there's so much uncertainty going on here has really caused market participants to trade out of fear, and that's essentially what we're observing. And it almost starts to feed on itself, where if you know that everyone else is afraid or that everyone else is concerned, then you yourself, the rational response is for you yourself to become concerned. And we're kind of now in a state much like we were in certain ways during the financial crisis, where there's really no one willing to say, okay, enough's enough, and to stand in front of the train.
Yeah, exactly. At the same time, we know it will be over at some point, and China seems to be coming back, beginning to at least.
Yes, although from what point is the issue? So. China has obviously took very draconian measures in terms of lockdown, and they have seen already a very, very substantial economic impact from that. Now, obviously, the infection rate in China was much higher than it is in the U.S.
And we hope that it doesn't get that bad here. Okay, many thanks now to Bloomberg's Cameron Kreis. Coming up, Bloomberg Politics editor Wendy Benjamin is here to handicap those primaries today. This is Bloomberg Radio.
This is a Bloomberg Money Minute. U.S. stocks are posting modest gains as investors speculate on the timing and size of stimulus promised by President Trump to combat the economic impact of the coronavirus. The Dow is up 175 points, S&P up 25, the Nasdaq climbing 94. Crude oil is up over 6% to $33.11 a barrel. Delta, American, and United Airlines have all walked away from their yearly forecasts, saying they're slashing operations because of the outbreak. And Royal Caribbean Cruises may be cut to junk by S&P Global Ratings as fears intensify that the coronavirus will continue to dramatically reduce travel. Dick's Sporting Goods plans to accelerate its plan to scale back on gun sales. Almost 80% of its stores will be gun-free. Donna Wilson, Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Have you ever thought, I wish I'd had that information sooner?
What does this tell us about the state of deal making?
Let's fix that.
One unprofitable company plus another doesn't make a profitable company.
Carol Mazur.
Talk to us about real-world applications.
Jason Kelly.
Remind us what the potential is for everyday folk.
Bloomberg Business Week.
Vice President of Exploratory Science is one of the cooler titles.
Weekday afternoons at 2 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg Business Week, now live on YouTube. Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Balance of Power with David Weston.
Coming up on Balance of Power, 6 states are holding their presidential primaries today. We talk with Bloomberg's Wendy Benjaminson on what she expects. But first, let's get a market check with Greg Jarrett.
Why, thank you. Markets had tried to claw back from a major loss that had occurred yesterday, one of the worst losses that we have seen in recent history, as a matter of fact. The possibility of stimulus coming from President Donald Trump was one of the main reasons that people were very optimistic at the open this morning. As I say, things went into the red, but have now bounced back, but just by a bit. We check those numbers every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is currently up just about 1%, up 26. Dow Jones Industrial Average is up 0.7%, up 166. And the NASDAQ is up 1.3%, up 104. The 10-year is currently down 26 seconds with a yield of 0.62%. West Texas Intermediate Crude had a really rough day yesterday, has tried to come back as well today. It's currently up 7.1% at $33.35 a barrel. COMEX Gold, the Haven asset, has fallen off 1.2% today at $16.56 even per ounce. The dollar yen is at 103.88. The euro, $1.1341. The British pound, $1.2942. A couple of stocks of interest. Ford is little changed right now. GM is up 1.9% at $25.17 per share. Netflix is up 1.5% at $351.32. And Twitter is currently up 3.5% at $33.59 per share. That is a Bloomberg Business Flash. Now Balance of Power continues with David Weston.
Thanks so much, Greg Jarrett. Former Vice President Joe Biden hopes to take a big step closer to the Democratic nomination for president today.
Michigan, Mississippi, Missouri, North Dakota, Idaho, Washington State, you will be heard. And Michigan, I'm counting on you in a big way.
That's the former vice president. But on the other hand, Senator Bernie Sanders hopes to reverse the Biden surge that we saw on Super Tuesday as 6 states, including Michigan, Mississippi, and Washington, all head to the polls. To take us through what to look for today and tonight, we welcome now Bloomberg Politics editor Wendy Benjaminson. Thank you so much, Wendy, for joining us.
Oh, thanks for having me.
What are the ones you're looking at, first and foremost?
Michigan, 100%. All eyes are on Michigan. Biden is very well positioned to win Missouri and Mississippi with its large African-American populations. Bernie has been known to do well in Washington and Idaho, although those gains were being sort of erased as Biden continues to surge. But Michigan is the battleground, apparently both in the primary and the general election, where it'll be hotly contested again in the fall. But Hillary Clinton was polling very well, just like Joe Biden was in 2016 against Bernie Sanders, and then he won by about 1 percentage point. We don't think that's going to happen this time, though. Biden has been spending a tremendous amount of time in Michigan, which Clinton did not, and it looks like he's going to pull it out. So he may be the presumptive nominee by March 17th after the next set of primaries.
Well, just a half step before we get to that, why do we think that the polls will be more reliable? Michigan, as you know, has been through history a tricky state. I mean, it's a complicated state. The Southeast is very different from the rest of the state. I mean, it went for George Wallace, for goodness sakes, back at 1.68. And I'm old enough to remember that. But so why do we think the polls will be better this time?
Well, I think that Joe Biden's message is doing very well certainly among the African-American community, and he does better with the union workers than Clinton did in 2016. He is, he portrays himself, and he really is, as someone who comes from, industrial Midwest, Scranton, Pennsylvania, working class roots. He acts like one of them. He has Medicare for all who want it. Bernie is offering Medicare for all, and if you're a United Auto Workers, you've got pretty good health insurance, and they don't want to see their health insurance go away. So that's a big part of it as well. And then Joe Biden and President Obama, of course, were responsible for the auto bailout after the last financial crisis in 2008, and Biden can take credit for that now.
And do they give him credit for that? Because that's a big one, obviously in Michigan. If you feel the auto bailout was a big deal for Michigan.
It was a huge deal for Michigan, and yes, he's reminding them of that every chance he gets.
So now you were saying he could be the presumptive nominee if he won that. Why is that? I mean, Bernie Sanders still has quite a few delegates.
He does have quite a few delegates. He's ahead only by 91 right now. So, yes, it may seem a little strange for me to say that. But if Biden wins most of the delegates tonight, there are 325 or 352, I don't remember, but more than 300 delegates at stake tonight. If Biden gets most of those, then he will pull his lead ahead. And then we look ahead to next Tuesday when you have Ohio, Illinois, Florida, Arizona, and Georgia voting. And those states, Georgia will be a Biden state. Florida is going to be a huge Biden state. Illinois is a little bit up for grabs. So, and Arizona is a little bit up for grabs, but the big prize, Florida, will undoubtedly, I shouldn't say undoubtedly, will most likely go for Biden. And at that point, it would be impossible for Sanders to beat him.
So play the game the other way. What if, in fact, Bernie Sanders pulls out Michigan tonight? What does that do to the race?
That means I'll be busy for a few more months.
That's right.
Yes, that makes it a real race still. And that then you would expect Sanders to park himself in Arizona and perhaps Illinois and Ohio, although they have the same demographics, the same sort of voting patterns as Michigan. So whoever wins Michigan will probably do well in Illinois and Ohio. But if I were Bernie Sanders, I would park myself in Arizona and stay there through March 17th and try to get a good solid lead there and get a few from Florida. And then in the next big set of primaries is what we call the Acela primary, because it follows the route of that train from Washington to New York, and that's all Biden country: New York, Connecticut, Pennsylvania, Delaware, and Maryland.
At this point, do we have a sense whether President Trump is more worried about Joe Biden or Bernie Sanders to run against?
Can't really tell which one he's more worried about. He seems to relish the idea of making these dementia old guy jokes about Joe Biden. I mean, he's got an easy tag on Bernie Sanders that he's a socialist, and that's just, you can write the ads from there. I think Biden's a little tougher for him. So I'm pretty sure the people in Trump's campaign are looking they'd be more worried if Joe Biden were the nominee.
And what's the situation with money? Is the money just pouring in at this point for the former vice president?
It is. It really is. There are still, he still needs to catch up to Bernie Sanders. Bernie Sanders still has a lot of money, and remember, his are all from these small dollar individual donors. But you've got a super PAC working for Biden right now. You've got a lot of the big donors that were holding back who are now seeing Biden as the presumptive nominee. So they're giving him a lot of money. And then you have Mike Bloomberg's effort. He dropped out of the presidential race, but he is putting in 6 swing states. He is putting all of his staff and money that he had for his own presidential campaign all in for Biden and against Trump. So that will have some impact.
Yeah, I wanted to mention Michael Bloomberg, who of course is the founder and majority shareholder of Bloomberg LP and now has endorsed Joe Biden, because just about 5 or 6 minutes ago we had Jen Epstein actually write something on the Bloomberg. I saw that there's a press release that 55 mayors that had been backing Michael Bloomberg have now backed Joe Biden. So there's some of the support that Michael Bloomberg's throwing his way.
Exactly. And that's happening with everyone. You have almost all of the former presidential candidates have endorsed Biden. There are still 2, I believe, who have endorsed Bernie Sanders. And the whole Democratic establishment is just rallying around Joe Biden.
Fascinating. Okay. Thank you so much to Bloomberg's Wendy Benjaminson. Coming up here, President Trump says he wants to counter the coronavirus in part with a payroll tax cut. We're going to talk with Maddie Duppler of the Taxpayers Union about whether that makes sense. That's coming up next on Balance of Power on Bloomberg Radio.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
We've all been in one, but how much do you really know about black cabs? For instance, did you know that a black cab has to be tall enough to accommodate an individual wearing a bowler hat? That's a lot of space for you and your briefcase. Or that Free Now drivers can use the bus lanes, the perfect getaway to make your meeting in time. And with 2-minute central London pickups, you needn't waste time searching for a taxi. Just download the Free Now app today and take the hassle out of getting round London.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
Kind of like the Millennium Force roller coaster at Cedar Point on Lake Erie. What a ride. A massive sell-off yesterday led to an optimistic opening today with a 3.5% gain. That's gone, but the market is still modestly higher after touching into the red earlier. Apparently, the optimism is based on news President Trump said his administration will provide assistance to cruise lines and airlines. No details have been offered. The president said last night he'd deliver major moves to fight the virus fallout sometime today. That has not yet come. We check the markets every 15 minutes throughout the trading day on Bloomberg Radio. The S&P 500 is up 0.8% up 23. The Dow is up 0.6% up 130, and the Nasdaq is up 1.2% up 96. The 10-year is currently down 28.30 seconds. The yield is 0.63%. West Texas Intermediate crude is up 7.9% at $33.60 a barrel, while COMEX gold is down 1.25% at $16.5480 an ounce. The dollar yen is at 104.05. The euro, $1.1322. The British pound, $1.2938. That's a Bloomberg Business Flash. Now more Bloomberg Balance of Power with David Weston here on Bloomberg Radio.
Thank you so much, Craig Jarrett. Live from the Interactive Broker Studio, this is Balance of Power. I'm David Weston. President Trump, in his brief remarks to the press yesterday about the coronavirus, promised he'd come back this afternoon with a plan for fiscal stimulus. And he said it would be very dramatic.
We'll explain what we're doing on an economic standpoint and from an economic standpoint, but they will be very dramatic. And we have a great economy. We have a very strong economy, but this blindsided the world. And I think we've handled it very, very well.
And the president also said that whatever he proposes will include a payroll tax cut. Here to take us through the options for the president is Maddie Duppler. She is senior fellow at the Taxpayers Union. Earlier, Ms. Duppler served as the coalition director for the House Republican Conference. So, Maddie, thanks so much for being back with us. Let's start with the payroll tax cut. Does that make sense? Some economists said that's the fastest way to get real cash into people's pockets.
Well, David, the complicated answer is it depends. So the payroll tax is structured in two-part ways that it's paid. One is the employer pays a 6.2% tax rate for Social Security, and then the employee pays the other 6.2%. So I would say if the administration is looking at the payroll tax as a way to deliver some sort of stimulus to try to combat the economic effects of the coronavirus, looking at that employer side could have an impact because businesses are going to have a really hard time if communities shut down, if people aren't frequenting their businesses. That could ease some liquidity concerns that small businesses have as they try to deal with, community containment measures. On the employee side, or on the individual side, it's unclear that impact is really going to have too much of a consequence for the individual taxpayer. That's because the people who would need some kind of stimulus, i.e. those at the lower end of the income scale, or those potentially who are out of work, won't see as big of an impact. So I would really caution against going for an individual side payroll tax cut. I'm not sure we get the biggest bang for our buck there.
Okay, Maddie, I want to interrupt you just briefly with a headline across the Bloomberg, a sad headline, not unrelated to what we're talking about. New Jersey is now reporting its first death from the coronavirus. So that's the headline that's just crossed here. So, of course, it bears our remembering that this is fundamentally a human tragedy as people are becoming ill and actually losing their lives, but also with real economic consequences that we're seeing in the markets every single day now. And that's what the president is really trying to respond to. Coming back to the payroll tax cut for a second, we should remember that the reason, as I understand, we have the payroll tax is to support Social Security. Can we cut that without doing further damage to the security of our Social Security?
Well, this is the question about long-term longevity of Social Security itself. It is paid from a trust fund. The reason that we have dedicated revenues to pay for these programs is so we know exactly what money is there to pay for those programs on which a lot of the population can and will depend. Now, in 2009, this was part of the stimulus program under the Obama-Biden administration as well, was a payroll tax cut. So it's not unprecedented to lean on the payroll as a means of easing economic crises. The question is whether or not it delivers like I said before, the biggest bang for our buck. Particularly, I think I would point out that the biggest difference here is that we're not facing an economic crisis. We're facing economic consequences from what is, as you mentioned, a public health crisis. What we need are targeted efforts to increase containment and to make sure that we have transparent and discrete efforts that really get to that problem. But the economic consequences are ones that public policymakers can anticipate. And that's why when we're looking at stimulus and fiscal measures, we need to make sure whatever money we're putting into the problem really does have the intended effect of easing the pain, particularly for workers who may be out of work. That's why something like a payroll tax cut, if you're not getting a paycheck, doesn't matter how much is not coming out of your out of the payroll tax cut then for you, right? We need measures that really make sure that workers can stay whole, they can pay their mortgages, businesses don't default on loans. Some kind of forbearance measures, I think, would have a bigger impact than just looking at an individual side payroll tax cut.
And the two can come together. That is to say, on the one hand, attempts to contain on the one hand, and on the other hand, the economic, in the sense that if you're an hourly worker who doesn't have sick pay, for example, you might be more reluctant to actually stay home and take care of your child or self-quarantine if you're really losing the wages you need. And if we could provide sick pay, maybe that could facilitate some of the containment.
That's exactly right. And, I don't want to draw too many analogs to the 2008-2009 crisis because there are a lot of differences here, but it is a template for how we deal with economic challenges. And so in that crisis, we expanded UI, unemployment insurance, to make sure that workers in the states had some kind of coverage if they lost their job. What we want to do here is try and prevent mass layoffs because businesses can't plan for some kind of downturn in their businesses. So something that would allow for extended sick leave, like I said, that payroll tax holiday on the employer side, so there's more liquidity for businesses to plan ahead, allowing for some small businesses to take deferral on some taxes. Those are the kind of measures I would like to see from the administration because it would ease some of the liquidity and cash crunch that businesses are going to feel, and therefore it hopefully won't have the more catastrophic impact of laying off workers, particularly those in service industries who really do depend on their paychecks, depending on the hours that they work.
I got you. So that really raises the question, and I've seen this discussed in some of the proposals being put in front of President Trump right now, about whether we really need to get the relief into corporations so they don't feel like they have to lay people off, or whether we need to get it directly into people's pockets, essentially like helicopter money. I mean, do you have a sense as a matter of tax policy, say, which is more effective?
I think that from my perspective, the more important question is what we can do to create as much certainty as possible in an uncertain environment. Like I said, businesses know essentially what their tax liabilities are going to be quarter to quarter. If we can help ease those deadlines for them in a way that increases liquidity or allows for deferrals where they know these fixed costs are coming into play, I think that would allow businesses to give their workers certainty, and those workers in turn won't be feeling a credit crunch at the back end because they know what their paychecks will look like in the coming months as we navigate our way through the coronavirus challenges.
What about some of the initiatives we're seeing in other countries? For example, I read that in Italy, for example, they're suspending mortgage payments, that you can have sort of forgiveness on mortgage payments. Should we be thinking about things like that we actually relieve some of that? I think it's a deferral. It's not, you never have to pay your mortgage, but you don't have to pay it the next 90 days, say.
Well, to once again draw some conclusions from the 2008-2009 crisis, one of the effects of that is that our financial services industry is much more liquid and much more well capitalized than it was in the economic downturn in 2008-2009. So I certainly think that you'll see that as a topic of conversation when the president meets with Wall Street executives tomorrow. And I would expect for those financial institutions to stand up and say, listen, we can play a role here in allowing for some kind of forbearance for those lenders who feel like they can't make their mortgage payment or their business loan payment. There should be some kind of accommodation for them as we move through these next couple of months because uncertainty is so high. My expectation is that would be, I think, a reasonable ask of the administration to work in concert with the industry to make sure that those individuals don't fall upon hardships as a result of these uncertainties.
Yeah, an awful lot of stuff to sort through. And of course, there also is the question is, can we afford it? And we're running up a deficit pretty fast as it is, but I guess in times of emergency, we figure out a way to afford it. Many thanks now to Maddie Duppler of the National Taxpayers Union. She's the person we always turn to when it comes to taxation. Coming up on Balance of Power, we're going to have a treat. That treat, of course, is for me to get to talk to my colleague June Grasso, who knows all about the law, and she's going to tell us what she's got coming up in the next hour. She, of course, is, besides other things, the host of Bloomberg Law, that daily radio program that you all listen to. That's coming up next. This is Bloomberg Radio.
Hey, have you heard? The Mayor of London has launched his latest van scrappage scheme to help tackle London's toxic air. Small businesses or sole traders like me with a polluting van could now get £7,000, which you could use to trade up to a Euro 6 vehicle. And you could get an extra £2,500 towards running costs if you go electric. The scheme is now even easier to qualify for, and it's open to any businesses with up to 50 employees, like mine. So, I'm going to search TfL Scrappage to see if I'm eligible and apply. You should do the same. To the Mayor of London and TfL, every journey matters.
At At the Bank of Santander, they've created Stan, a smart bot that can predict the future of remortgaging.
I'll read Stan. Will my mortgage rate go up?
1955, 1/3 half time. Newcastle, 1/3
No, try not to mumble. Meanwhile, at Santander, they can't predict your future, but they'll help secure it with great mortgage rates fixed for up to 10 years. See what's possible at Santander.
Early repayment charges apply. Lending subject to status and criteria. Your home may be repossessed if you do not keep up repayments on your mortgage.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
You need a free now.
This week on the New Yorker Radio Hour, we'll ask whether America is ready to elect a Democratic Socialist for president. Plus, the science fiction legend William Gibson on climate change and the end of the future.
How often do you hear the phrase, the 22nd century? Don't hear it. We no longer have that sense of cultural anticipation.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
This is Balance of Power with David Weston on Bloomberg Radio.
Live from the Interactive Brokers studio, this is Balance of Power, and I am, in fact, David Weston. But more important, I have June Grasso here, my colleague, because she's going to tell us what she's got coming up in the next hour. She always brings us some legal goodies.
What a lovely intro, David. Thank you. Well, I don't know if the first one's a goodie, but, you know, as the coronavirus is spreading, we were talking yesterday about the lawsuits, and don't you know that one of the couples on board that Princess cruise line that's still docked in outside of California there is suing the ship operator for gross negligence because they say that the operator, Princess Cruises, knew before they let all these other people get on that there already had been someone on the ship who had the coronavirus and that they didn't take any precautions. They didn't even warn people.
If that's true, that's a bad fact.
That is a bad fact. They still have to go through the negligence proof and prove there's a duty and everything. But then we're doing this very sad. It's a sad story to me, very sad, because federal prosecutors yesterday indicted an international ring of horse trainers, veterinarians, and drug suppliers.
Oh, I saw that, yes.
This is just an awful story. They have been doping racehorses to make them run faster. And in doing so, the racehorses, and not only to make them run faster, but also to make them run when they'd had perhaps injuries or stresses when they shouldn't be running. And
I saw the story of one that had run a big race in Abu Dhabi, I think it was, and he had like 4 knee surgeries, this poor horse. I didn't even know you could do that with a horse. And he had him all doped up, and he won the race. But goodness gracious, what they were doing to these poor horses.
One of the trainers, and he's talking Maximum Security, I think he won the richest race, a $10 million race in Abu Dhabi. And he apparently doped all his horses, almost all his horses. And so there are deaths of horses. There are deaths that were covered up. There are injuries. And one of the, I don't know that much about horse racing, except that I think the horses are incredibly beautiful and always worried about abuse. But anyway.
But is it against the law?
Well,
I mean, is it the rules of the race?
They haven't, right. They haven't been, and we'll learn more about that, but they haven't been, in other words, they're taking drugs and they're disguising what the drugs are. They're using drugs that are not FDA approved. And one trainer had this, in fact, the one who was Maximum Security's trainer had an elaborate ring of tipsters telling him what was going to happen, drugs, and then changing the medication forms from the FDA. I mean, this is millions and millions of dollars at stake here. But the horses, we don't know how many injuries, because they didn't specify how many injuries or how many deaths. But one of the horses that people will know, XY Jet, was one of the trainer's horses, and he's named in one of the indictments as having gotten these performance-enhancing drugs, and he died of an apparent heart attack in January, and the heart is what this affects. So, it's not only sad, and also the horse racing industry, that's $100 billion global industry that's under attack recently.
You're affecting the betting odds, I guess that's right.
Right, and also there were deaths at Santa Anita Park in California, but they say this is not connected. And then also, a nicer story, the Stairway to Heaven lawsuit that's been going on and on and on. a win for Led Zeppelin at the Ninth Circuit. It set some precedents in copyright area, so now we have to see if it goes to the Supreme Court. But that's a really interesting case.
It's a fascinating case. I actually followed that some, and it is absolutely fascinating. And I was worried about Led Zeppelin.
Well, they're fine.
Yeah.
They're fine. The jury found for them, and then a panel of the Ninth Circuit said, no, you have to have another trial. And then the full Ninth Circuit, en banc panel, you know how rare that is, said no, and we're going to do away with one of the concepts that we've been for about 40 years using in copyright law, which is, you have to, how much proximity you have to what you're hearing.
Yeah,
so
that's fascinating.
Yes.
This is a great program you're putting here, but I'm not surprised, June. I would expect nothing less from you. That's June Grasso, who will be continuing here in the second hour of Balance of Power. But that does it for the first hour of Balance of Power. I'm David Weston. Thank you so much for joining. And this is, of course, Bloomberg Radio.
This is a Bloomberg Pursuits look at luxury. For the first time, Calabasas, California has eclipsed Beverly Hills in Bloomberg's annual ranking of the richest cities in the U.S., with an average household income of $194,010 a year. Calabasas owes some of its success to the usual reasons: good schools, low crime, open space, but also reality TV fame on Keeping Up with the Kardashians, now in its 18th season. If you decide to visit, swing through American Express's new Centurion Lounge at LA International Airport on the way. The LAX Lounge, which opened Monday, is Amex's 12th and its most ambitious yet. Moonrise and sunrise rooms help travelers transition between time zones, along with free ear reflexology and Reiki energy treatments. Amex's investment in its airport lounges represent a doubling down on travel benefits as a way to acquire and retain premium credit card holders as it fights off Chase. I'm Andrew O'Day, Bloomberg Radio.
When you put together the puzzle that's today's business and political environment,
can you make a call given this swirl of data?
Is that already being reflected in the way that they're priced?
Make sure you have all the pieces.
Which segments of Alphabet's business are most likely to come under scrutiny?
They're getting mixed signals from governments.
He's failed to gain traction. Will he have to abide by a subpoena?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. Ah, that's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fair housing. That's HUD.gov/fair housing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A turbulent session, an update right now. Stay with Bloomberg right through the afternoon to see where markets close and, of course, how Asian markets react tonight. Stocks swinging wildly as investors speculate about the timing and size of stimulus proposed by President Trump to combat the coronavirus's economic impact. Right now, we've got the S&P up 34 points. That is a gain of 1.2%. The Dow advancing by by 1%, up 233 points. NASDAQ up 123 points. That is a gain of 1.5%. The yield on the 10-year right now is 0.64%. Gold retreating by 1.5%, $16.54 the ounce. Crude surging after yesterday's plunge. Crude up 8.3% right now. A barrel of West Texas Intermediate, $33.71. Brent, $37.31. Barrel of Brent up today by just about 8.5%. S&P 500 index whipsawing from the outset, surging before a gain that reached 3.5% evaporated, only to turn higher after Trump said his administration will provide assistance to cruise lines and airlines. As for the overall market backdrop right now, Mike Ryan is Chief Investment Officer for America's Wealth Management at UBS Financial Services.
There's three things that we've talked about repeatedly that are going to be critical for the market to find stabilization. First is when you see some evidence that the virus is reaching containment. While we're seeing that in China, we're not really seeing that elsewhere. Secondly, we need to see some clarity on what the economic fallout or impact will be. And then thirdly, which is to the point that Romain mentioned, we need to see policy action. We also need to see it on a concerted basis. That is, not just a series of one-off or idiosyncratic policy moves, but something that's more concerted. But also we have to have validation of that.
And he was interviewed this morning on Bloomberg Television. Again, recapping, the Dow, the S&P, NASDAQ, all advancing. United Airlines saying right now it does see further deterioration in U.S. bookings. For the most part, airline shares are advancing right now. We've got American Airlines Group up by 2.5%, JetBlue up by 3.4%. On the minus side, Delta down 2.3%, and Southwest dropping by 1.9%. It's now 1:02 on Wall Street. Time now for the Market Drivers Report with a focus on American depository receipts. And here is Dave Wilson.
Thanks, Charlie. ADRs are rising along with U.S. shares. The S&P ADR index is up 1.1%, and the S&P 500 is higher by 0.9%. The UK's Lloyds Banking Group has risen 3.9% in U.S. trading. The lender reached an agreement to work with Google's cloud computing unit as part of a $3.9 billion investment to overhaul its technology. Another UK company, Informa, has gained 8%. The exhibition and publishing company's profit for last year beat analysts' highest estimate in a Bloomberg survey. Informa gave no forecast for this year because of the effects of coronavirus. Hong Kong's Wharf Holdings has dropped more than 12%. The real estate, shipping, and cable company posted earnings and revenue for last year that were well below estimates. And Abu Dhabi's NMC Health has fallen more than 31%. The hospital owner said it found $2.7 billion in debt that hadn't received board disclosure or approval. NMC Health added that some of the proceeds may have been used for, quote, non-group purposes, Charlie.
And we thank you very much, Dave Wilson, tracking those American depository receipts. Again, wild day for U.S. markets, big swings. Stay with Bloomberg to see how things shake out at the close. Oil right now rebounding from its worst loss since 1991 on speculation that potential tax cuts may shield the market against the coronavirus, and a price feud between major producers, talking about Russia and Saudi Arabia. West Texas Intermediate crude again now up by 7.9%, $33.59 a barrel. Delta Airlines and American Airlines Group today withdrew their 2020 financial forecasts and outlined plans to cut back on flying as they grapple with a rapid decline in travel demand because of the coronavirus outbreak. And President Trump says his administration will provide assistance to cruise lines and airlines as a result of the coronavirus outbreak without offering any details. Earlier today, Royal Caribbean withdrew its first quarter and full year forecast because of the coronavirus. Its shares RCL rallying now by 4.2%. Carnival Corp up by 4.1%. Norwegian Cruise Lines Holdings is lower. It is down now by just about 0.1%. Well, amid all the market turmoil, we are getting earnings reports. Dick's Sporting Goods, the largest U.S. sporting goods retailer, its shares higher, little changed, up by about 0.1%. It does say it plans to accelerate its retreat from gun sales, removing weapons and other hunting products from about 440 stores. The retailer says the decision means about 80% of its stores will be gun-free. Shares again higher after posting earnings and sales that beat estimates for the fourth quarter. Some of the other stories that we are following for you today: the historic panic in global stock markets has spawned a fortune for some of the world's biggest investment banks. Sources say J.P. Morgan Chase and Citigroup have added about $500 million in revenue from equity derivatives trading year-to-date compared with the same period in 2019. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should be sanctioned.
We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
Welcome to the second hour of Balance of Power. I'm June Grosso. Ahead, we're going to be talking about the coronavirus spreading as the lawsuits are, and expect more to come. Federal prosecutors indict more than 24 trainers, veterinarians, and drug suppliers in an international ring that doped race horses to make them run faster, leading to injuries and deaths. And Led Zeppelin wins the epic legal battle over its 1971 classic, Stairway to Heaven. But first, there are a lot of unknowns about the coronavirus, but what is known is that it's just a matter of time before there'll be multiple lawsuits against the government and businesses for a laundry list of legal complaints. The latest, a couple still aboard the Grand Princess cruise ship that's docked in Oakland, California, has filed a $1 million lawsuit against the ship's operator for gross negligence. Joining me is Nicholas Diamond, Senior Manager at Avalere Health and Adjunct Professor of Law at Georgetown Law School. So, Nicholas, tell me, the people who are on board that ship, the State Department has warned Americans at this point not to travel by cruise ship because of the spike in cases of coronavirus. So it's almost certain that lawsuits would be filed. And the couple claims that Princess Cruise Lines continued the voyage without doing anything, even though they knew that other passengers on the same ship had shown coronavirus symptoms. What should the ship have done in that case?
Well, thanks for having me, June. This is definitely a tricky one, and it's not surprising to me we're seeing some liability issues like this come up. I think businesses really have to think about liability, both in terms of their customers and then also just in the business-to-business contracts, what the effects there could be, too.
So tell us about, are we expecting, for example, as businesses try to stop their employees from spreading the virus or even getting the viruses, and are there questions that they should not be asking their employees about their home environment, whether they can work from there? Is there anything that's like off base?
No, I wouldn't say there's anything that's dramatically off base in that instance. I do think a high degree of communication between the businesses and their employees is really going to be valuable here. And I think businesses, as we're seeing quite publicly in the news, trying to be supportive of giving their employees opportunities to the extent possible to work from home and just have maybe a more flexible work experience in the near term for the sake of broader public health.
Are people close to a panic situation, and is there too much fear? For example, in New York City, you get on a bus, you get on a subway, and people are looking at each other. You have a lot of hand sanitizers. Right. Is it too much at this point?
Yeah, I would say it's not too much, and this really tracks with the experience we had several years back, for example, with H1N1, swine flu, as it's sometimes called. And it doesn't surprise me that we're seeing that at the moment. I do think a certain degree of awareness is appropriate, and and the CDC has been very public about this in terms of providing guidance. There are measures you can take just in daily activities, such as making sure to wash your hands frequently, that are very relevant for this situation. So I think there are some positives in that vigilance that we're seeing generally in the public.
Now, in the U.S., employees are protected under the Occupational Safety and Health Act, OSHA. Does that have any relevance to what's happening today in the workplace?
I think it would have some relevance. Many of these things are, governed under federal law for certain employers. There will be relevant state laws and perhaps even local laws as well that would apply these situations. And I suspect those are the very laws that corporations are looking at as they're trying to think about the best approach to take for their employees.
And as far as lawsuits to come, do you expect there be a lot of lawsuits against employers or against the government? Or against businesses? Where do you see most of the lawsuits?
Right. I think in the long term, we will probably see more litigation on the contract side, so business to business. That would be my best guess. There are, for example, trigger clauses that are typically found in most commercial contracts that, for example, could permit non-performance in the instance of, let's say, a hurricane or other natural disaster. And the wording of those clauses will be very important here because they might, for example, reference a pandemic as well or some other public health-related emergency that could excuse performance under the contract.
All right, we'll have to leave it there. We'll have to leave it there, but this is going to be a subject that's going to be continuing for quite some time. Thank you. That's Nicholas Diamond, Senior Manager at Avalere Health, Adjunct Professor of Law at Georgetown Law. Coming up, we're going to take a look at the markets. I'm June Grasso. This is Bloomberg.
Leaders are born.
What does it take to get the markets back on the rails?
Born leaders are here.
The timeline for that can be slow.
Karen Moscow.
Several nations are negotiating to evacuate diplomats.
And Nathan Hager.
How are you advising clients to navigate the shifting headlines?
Bloomberg Daybreak, weekday mornings at 5 Eastern.
Are we heading into correction territory, do you think?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the Lingo.
GOAT, G-O-A-T, acronym, stands for Greatest of All Time. As in, spaghetti sandwiches for dinner? They're my fave. Dad, you're the GOAT.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org. Brought to you by the U.S. Department of Health and Human Services, Adopt U.S. Kids, and the Ad Council.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
On average, in London, a scooter or motorbike is stolen every hour. Make sure it's not yours. Lock your bike, chain the rear wheel, and cover to make it harder to steal. Lock, chain, cover. The Met Police.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Car shopping, you mean business. You ace vehicle history searches and test drives. You out salesman to the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
The market's in focus every business day. The P&L Podcast with Paul Sweeney and Lisa Abramowitz.
Are there some sectors that you want to have more or less exposure to?
What's behind this engine of gains?
Analysis of the day's Wall Street action.
The U.S. market looks relatively safe.
From Bloomberg Intelligence, Bloomberg Opinion, and influential newsmakers.
Ward McCarthy joins us right now.
P&L with Paul Sweeney and Lisa Abramowitz. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, they are all pushing higher. Bottom line, those stocks being whipsawed today by uncertain stimulus timing. Right now, we have got the S&P up 46. That is a gain of 1.7%. Fast-moving markets here with the Dow up 362 points, up 1.5%. NASDAQ surging 157, up now by 2%. Stay with Bloomberg for the latest on financial markets. Our next update, by the way, coming up in just about 13 minutes. Number of coronavirus headlines to pass along to you. Italy's coronavirus cases have topped 10,000, while deaths have jumped to 631. New Jersey's first coronavirus death has been confirmed. And in New York, Governor Cuomo says the National Guard will be sent to New Rochelle, that's a New York suburb, to help close large public gathering spaces in an effort to slow down the spread of the coronavirus. And one other headline relating to coronavirus, United Airlines sees the coronavirus crisis as, quote, short-term. Its shares surging today by 6.7%. 10-year, the yield there is 0.67%. Gold down 1.6%, $16.54 the ounce. Crude surging 8.7%. West Texas Intermediate up $2.70 a barrel, now at $33.82. Recapping, stocks higher, S&P up 52, up 1.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie. Well, as Charlie just explained, another wild day on Wall Street with stocks swinging between gains and losses. Investors speculating on the timing and size of the stimulus promised by President Trump to combat the coronavirus's economic impact. Joining me now is Christopher Versace, Chief Investment Officer at Temetica Research. So, Christopher, we're seeing this massive volatility, and even if there is some stimulus from the federal government, we keep seeing headlines such as, the governor of New York sending the National Guard to close down public places in New Rochelle and another death in New Jersey. So how much can the stimulus do to suppress that volatility?
That's a great question, June. It's one of the things that we've been talking about and writing about in our notes to clients and such, that, last week we saw the Fed cut 50 basis points on interest rates. There's expectation that they're going to do another 50 to 75. Last night there was the payroll tax notion that was floated, and yes, there seems to be some type of stimulus that we might get. But if people are home, ensconced, sick, quarantined, cocooned, whatever it might be, it begs the question, how impactful will any of these stimuluses be if people can't go out and spend? And I think the real issue here is some of these issues and some of these solutions will have a positive impact when the coronavirus passes. But in the near term, I don't see them having a major impact on what is essentially a medical crisis, not an economic one.
Now, Goldman Sachs Group strategists expect stocks to post a drop of between 20% and 25% from their peak before rebounding. Do you agree with that? Do you have any idea or any, strategy as to when you think you'll see a rebound?
I think it's really going to hinge on a few things, and what we're all trying to do is assess the impact of the global economy as well as the impact of corporate earnings. So, with the global economy, obviously we've seen what's happened in China, and there are increasing reports that China is getting back to work. But then we look at what is going on in Italy, the 8th largest economy in the world, and we see that these cases continue to grow, and they have locked down 60 million people. So it's a very difficult thing to get our arms around in terms of the impact, particularly here in the U.S. when we have 320 million people. And if we start to, do some simple math, you're looking at potentially 50,000 people, within cases in the span of perhaps the next 2 weeks. And what that impact is to the economy becomes quite large. In terms of corporate earnings, we've heard no shortage of companies pre-announcing, whether it's on the hospitality side, travel side. But the big wild card is if people are indeed staying home, they are not going out to eat, they're not getting their hair cut, these types of things, there is a secondary derivative hit to the economy. So is it 20%? Is it 15%? Extremely hard to tell until we see what the impact really looks like in the U.S. And I don't think we're going to see that probably for at least a week to 10 days.
Okay, a week to 10 days of this whipsawing, it would be a lot to expect. So tell me this. You mentioned the Fed. What's the Fed's role here in a falling market? Because President Trump tweeted about the Fed today, haranguing the Fed to cut rates again. Is it the Fed's role here to do that, and would it help?
Well, the Fed's role is to try and keep, prices stable and keep the economic expansion going. So, they have a number of different tools, and I suspect they will do whatever they can. But, it's kind of like, saying I want an apple and I'm going to eat an orange, right? Because the two don't necessarily go together. And by that, I mean, the economic impact of a medical crisis. Their solutions are not going to do much if we wind up having a hospital shortage or some other shortage developed in the U.S. like we're seeing in Italy. So you can lower interest rates all you want. That's not necessarily the tool for the problem.
How much depends on the information coming from the federal government and whether that's consistent when you do have states and state governors giving information to the people in their state? So does it matter that much if the information from the president and the administration is a little mixed?
I think it makes it hard to wrap your arms around exactly what's happening. Again, if you look at what happened in China, they were first reporting cases, then they restated the number of cases. There was a lot of uncertainty there. I'm hoping that between the states CDC and some other